Welcome to the most important video on my channel, arguably on YouTube as well. You're probably tired from jumping from a video to a video, this guy explaining this guy explaining that, this guy's strategy is very complicated. You try an ICT, SMC, supply and demand, all of these concepts, and then you're just like, what is going on? These concepts are very, very difficult. They're very subjective, they're very opinion based. Or you watch their videos, and then at the end of the video, you realize they say, yeah, by the way, if you would like to learn my full strategy, you'd have to join my mentorship. Unfortunately, that's the truth about all these online gurus. And that's exactly why I'm recording this free course explaining this strategy completely in depth, completely for free for you guys. Now, look, I completely understand this. I personally tried ICT before. I tried supply and demand. I tried orb. I tried almost every strategy, and I kept hopping from strategy to strategy. None of them worked for me. I'm not saying they don't work. I'm just saying they didn't work out for me. Why? They're very difficult. They're very complicated. They use these very opinion-based stuff. They explain the strategy, you think this is a valid trade, and then they take trade in the opposite direction, and you're like, yo, what's going on? This strategy, I'm explaining it in a very, very, very basic terms, start teaching it to you as if you don't know anything about trading, and then based off that, I'm explaining more advanced. That's exactly why I want you to watch this whole video and forget everything you know about trading. Everything you know, just remove it from your brain and watch this video, because I want you to watch this from the beginning to the end without skipping any parts. Even something as simple as market structure. Because the way ICT reads structure is different than the way I read structure, is different than the way you read structure. So that's why I'm teaching you today how to do everything mechanically. What does mechanically mean? It means when you take a trade, win or loss, I'm taking the same trade. My students are taking the same trades. Any single trader who trades the Nowick strategy is taking the exact same trade. And that's the best part about it. When you lose, I lose. When you win, I win. We all win together. We all lose together. And I just realized I forgot to introduce myself. My name is Omar Nowick, and if you're wondering why my name is Omar Nowick, it's because I trade Nowick candles. I posted kind of similar course back in the days, and my goal was to get 5 people profitable using this strategy. Well, you want to be shocked? This was the result that people were able to achieve. Now, these people who were able to achieve this are not smarter than you. They're not better than you. They just put in the time and effort and watched these courses that I'm posting and showing you right now. And they were able to achieve these because they stayed disciplined and stayed consistent and didn't try, to take the fast route. I'm gonna be honest with you. 4 hours video, yes, it is a long video. Yes, it takes time to finish it. Yes, most probably you're not gonna be able to finish it within one take. It's all right. Imagine it took me, I finished this whole video, by the way, within one take. This whole video was recorded in one sitting. That's how much value is in this video. And I couldn't, I was trying my best because I wanted to finish it in one day. Why? Because I can't wait until I give you this free value. I genuinely wished when I started trading, I had someone giving as much value in one video, explaining his strategy that has an 85% win rate, and it's super simple. Now you might be like, Omar, 85% win rate, no one has an 85% win rate. Well, I'm gonna be honest with you. That's what you think. But after you watch this video, and I made a live backtest within this video. What does a live backtest mean? It means I went to a random date. So when you go on TradingView, you can press random bar. Took me to random bars like in 2020, 22, 2024. And that's when I was taking the trades. No edits, no cuts, no speeding the video, no, I showed even my laptop so you see no double screens, nothing. Nothing. Completely in front of your eyes to show you that it is possible to achieve such a high win rate using this strategy. You gotta be dedicated enough to watch this whole video. I don't know why. I don't wanna beg you to watch this video because it's up to you at the end of the day. You're the one who's gonna become profitable or not. I'm already profitable. Here you can see some of my results. I'm averaging more than 25K a month using this strategy. November alone, I was able to make 22. April, I was able to make around 50,000. But this wasn't always the case. I didn't come from money. Actually, you know what? I'm gonna show you where I used to live. This is where I used to live. This is the basement I used to live in. This is where it all started. I hated my life then. I was a university student going to in Sweden. University student in Sweden means it's very time consuming because education level is very high and it's very difficult and it takes so much from my time. It took so much from my time. But that wasn't the only thing I was doing then. I was also working in a 9 to 5. I used to work in something called lager, aka a warehouse, carrying packages, physical work. So I used to do this work, study, and on top of that, I used to trade as well. Now you might be wondering, okay, but Omar, if you went to university and you got your degree and you had, you could work with a corporate job, or back in the days you were also working a 9 to 5 and all of that, what made you, like be super dedicated into making it in trading? Well, I'm gonna be honest with you. The whole concept of 9 to 5 doesn't make sense in my head. I wanna ask you this question. Let's say you make, I don't know, $20,000 a month. Or you know what, let's say you make $100,000 a year from work. That's a more realistic number. So let's say you make $100,000 a year. Do you think, that's a really good salary, right? Do you think your boss would hire you if you were not making him at least $500,000? 100% not. The company wouldn't be hiring you if they wouldn't pay you $100,000 if you're not giving them making them at least $500,000. So this literally is a scam. Why would I make someone more money and then they're not doing anything and then they're making more money than me? That didn't make sense in my head. Because even if you work harder at the company, you're not gonna get richer. The company will. And maybe after 5-10 years, they're gonna give you a raise. But that didn't make sense in my head. It didn't make sense in my head that whenever I need to take a vacation, I need to take a permission. It didn't make sense in my head where if I'm sick, I get a limited time to not, go to work. It didn't make sense. I'm a guy who likes to travel. It didn't make sense that I can't travel whenever I want, wherever I want. All of this didn't make sense in my head. That's exactly why I had to find a solution. Working a 9 to 5 with a corporate job, with a degree, all of that is nice. Says who? Says the people who program us like this. We got programmed that that's the path we gotta take. Yes, finish university or college and then go find a 9 to 5 and start working. That's not the right path in my opinion. This didn't make sense in my head. I just literally can't work for someone. And that's just the truth behind it. Because the whole system of working for someone didn't make sense in my head. So if your excuse is, I don't have time for trading, I got a wife, I got a kid, I gotta take care of my family, I don't care. That's literally excuses. Because if you can't put 4 hours now into watching a YouTube video that's gonna potentially change your life and make you unlimited money, I'm not saying that's guaranteed, but there is a potential for that, then honestly speaking, if you can't put these 4 hours to watch this, skip the video, don't watch it, because this is not for you. Because how are you expecting yourself to be able to compete in a market where trillions of dollars every day are put into this market? It's very smart people, very rich people you're competing with. If you're expecting, yes, trading, you should watch a 15 minutes video, you go on TradingView and you start trading it, that's not the truth. This video, I made it from scratch. I made it in a way where you start from the beginning and everything is built step by step. So I want you to think about it as if there is a building. You want to build an apartment, let's say. A house, sorry. If you want to build a house, you need to build the base first. And based of that, you start building. And then you put, the ceilings, then the roof, then, all of these stuff. But if you don't build the base right, everything is going to end up falling down. So I structured this video in this way. Every point, the one after it is based on the one before it, because everything is connected. So if there is something that you don't understand in the beginning and you just skip to the end, you're not going to be able to understand the beginning. And that's just the truth about this video. So you have to go through it step by step by step by step, okay? And I want you to go through even the basics of the basics. Even if you've been trading for 5 years, as I said, you might think that you know everything. You might think that you know the market structure. But trust me, from a person to a person, it's very different. And today I'm teaching you the mechanical way of reading trends and the mechanical way of trading the no-wick strategy. So I'm not gonna yap too much. I know you're excited, and I just have a couple of requirements. These are the rules for this course in order for you to be able to be as productive as you and get as good results as you can. I want you to get the best results. First thing first, if you're laying down right now in bed watching it on your phone, don't do that. Bring your notebook, bring your pen, or on a Word document or on your notes. I don't know. You gotta take notes. Take notes, take screenshots. You gotta have everything, all right? If you're right now driving your car and watching this video, I don't want that. This is not a podcast. This is a very serious video that I want you to get value from. So if you're just right now driving your car around and listening to this, pause the video, come back to it when you're at home, and then watch it, because I want you to be fully focused. Put your AirPods or your earphones and lock in on this, okay? That's the first thing. Second rule, no skipping any parts. You have to go through it step by step by step by step. Please do so you can get the best value, all right? And it took me so much time to record this video. It took me more than 10 hours from preparing, editing, cutting, and all of these stuff. So just as a thank you from you to me, all I want you to do is take this video seriously. This might change your life forever. That's why I'm telling you, take this video very seriously and don't just, run around and, thinking, okay, maybe this will work. Don't have that mindset. If you have the mindset of, yeah, I will see if this works, you're doing it wrong. This video, I don't want you to think about it. Let me see if it's gonna work. I want you to have the mindset of, how does this strategy work? How do I make it work? How does this guy make money from it? How do these people make money from it? Not does it work? Because does it work? You're gonna see in the live backtesting that it does work and it works amazing. Just I want you to be able to grasp the value and the knowledge in order to be able to get the best results, okay? So these are the requirements. That's literally all I'm asking from you. If you want to actually thank me for this video, take it seriously, and that's it, all right? And I wish you get the best value, and let's get it. So everything I explain in this video is gonna be first off charts, so AKA I'm gonna be drawing here, for example, and then after that we're gonna do a quiz, so we make sure that you understood what I'm talking about, and then after that we're gonna do on the charts. So everything that's gonna be the structure: off charts, quiz, then charts, and then we just repeat that process, okay, for each section by section. So first thing first, we're gonna start with the 3 types of trends. Now I know most probably already know this, but I want you to please lock in, okay? Because the way I'm gonna explain market structure is very advanced, and if you don't understand the basics, you're not gonna understand what I'll explain later. And it's very important that you really lock in on this part. Don't skip it, because I'm gonna be honest with you. The way you read trends is different from the way ICT reads trends. It's different from the way I read trend. It's different from a person to a person. That's why if you wanna use the no-wick strategy, I want you to be able to read the trend exactly the way I do. Just so in order to do that, I structured it in a very simple and advanced way. So we're gonna cover it from the basics, like what is a trend, until you reach a point where you know what a breakout structure is, what a change of character is, the 3 steps confirmation, the snake method, and everything fully in details, okay? So let's lock in on this one, and please don't skip this part. Reading the trend is maybe 50% of the strategy. So if you don't understand this section, once I explain to you the strategy, you're not gonna be able to understand anything. Anyway, let's skip the yapping and jump straight into it. So there's 3 types of trends: uptrend, downtrend, and horizontal. An uptrend is basically when a price is moving up. So price is going upwards. A downtrend is basically when price is going downwards. And a horizontal is price is not going neither up nor down. So it's just moving sideways. Now, another name for an uptrend can be called bullish trend. So just so you know, if you hear me saying bullish trend, I mean uptrend. And if I say uptrend, I mean bullish trend. Second type is called downtrend, or it's called bearish trend. So either bearish or downtrend, okay? They're the exactly same. Third one is called horizontal trend or consolidation. Okay, so these are the names. I just want you to know them. In case I change the names, you always know what I'm talking about. Now you might think, that's literally all the types of trends. Now you might be like, okay, I already know everything about trends. Oh, you'll know like maybe 1% now. So this is how an uptrend looks like. It goes up, down, up, down, up, down. Now this is how a perfect example looks like, you know. In reality, this is how an uptrend looks like. So an uptrend consists of higher highs and higher lows, always. An uptrend consists of higher highs and higher lows. So you need to always have an uptrend, you need to have a higher high, higher low, higher high, higher low, higher high, higher low. Now, why is this called a higher high? Let's say this one. Why is this one called a higher high? Because this high right here is higher than the high before it. That's simple. Now, do you really need to know why? No. Do you care? No. Why am I explaining it? Because some people find it easier if they know and like to understand a bit more in depth. And why is this called a higher low? Because this low is higher than this low. Same concept. Why is this called a higher high? Because this high is higher than this high. You know, this is the high, this is the low. This high is higher than this high. This is a high, this is a low. This low is higher than this low. Now, you don't really need to go too much in depth into this. You just need to know an uptrend consists of higher highs and higher lows. That's it. Now, when we break the highs, it's called break of structure. So you see, now here we had a high, higher low, right? Once we broke this high, it's called break of structure. Now, I know if you're coming from an ICT trader, break of structure is something else for you. But I want you to, as I said, forget everything that you know and just focus on what I'm teaching you. Because that one is called, I name it change of character, which we're going to talk about after this. So just so you know, every time we break a high, it's called the break of structure. So think about break of structure as a sign. Okay, now we're going upwards, more up, more up, more up. You know what I mean? So when we break the highs, it's called break of structure. That's it. Now, a higher low is only confirmed when we break the highs. So you see this higher low right here? This doesn't become a higher low until we get this break of structure. So before the break of structure, this is not called a higher low. Same concept here. You see this higher low right here? It's not a confirmed higher low until we get a break of structure. So only after we get break of structure, we call it higher low. Okay? So before that, it's not a higher low. So let me show you a quick example about that. Oh, I accidentally copy-pasted it 100 times. So let's say price afterwards decide to do something like this. Is this a higher low? Not yet. What about now? Is this a higher low? Not yet. It's called potential higher low. Now you're like, why, Omar? But we came back down and now we're going up. Why is this not a higher low yet? I'll tell you, because we still didn't have a break of structure. But now, after we got this break of structure right here, after this break of structure, now this is called a confirmed higher low. So now this becomes a confirmed higher low. Okay? So that's how easy it is. Don't overthink it. Don't overcomplicate it. And that's it pretty much. Now, let me just clean up a bit so you can take... Actually, before I start explaining, always take a screenshot of what I'm going to talk about. Take a screenshot of this. Because I want you, if in case you want to take notes or anything, I made it in a very nice way. Like this took me actually a lot of time and effort to do it. So take screenshots so you have them, so you don't forget it, okay? Anyway, now this, I wish the trend always looked like this. That would make our life easier, right? Like just higher highs, higher lows, break of structure, higher high, higher low, higher high, break of structure. That would be nice. Like that would be very easy. Now a more realistic uptrend would look something like this. So after a break of structure, a new higher low is formed. And we call it recent higher low. Now look, before you get confused, in the previous video, if you watched the 4 hours course, I talked about swing highs and swing lows. But I realize you guys have been really finding it difficult to understand. That's why today I'm going to simplify it. And instead of talking about swing highs and swing lows, we're going to be talking about recent higher low and recent higher high, okay? because the swing high and swing low is used for swing trading or intraday trading. Now we're doing something called scalping, which is getting in and out of the trade within max 1 hour, 1.5 hour. That's why forget about everything I told you before and lock in on this, okay? I want you to raise everything that you know and just focus on what I'm teaching you right here. So after a break of structure, a new higher low is formed. It's called recent higher low. Like here, you see, we got a break of structure, so this became the higher low. La 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 la, break of structure, this became the higher low. Ta 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 ta, this becomes the higher low. Now, I'm gonna explain to you why this one, not this one. Everything between the higher low and the higher high is called internal structure. So everything in between the higher low and the higher high we don't care about. It's just noise. As you can see, I already wrote it down as well. Ignore internal structure, it's just noise, and use the snake method to confirm the recent higher low. Okay, perfect. So look, we had the low, high, higher low, higher high, break of structure. Cool. What do you do now in this case? You go to the higher high. You draw a circle on it. Now you want to know where's the higher low, because now remember this, every time we have a break of structure, a new higher low is formed. Every single time, no exception. Every single time we get a break of structure, a new higher low is formed. So now after this break of structure, we got this high, where's the higher low? You do the snake method. You draw a circle, you go back like this, and the first time you see, the V shape or the N shape in the downtrend, like first time you see a turnaround, that will be a higher low. So you see, we got a break of structure, higher high, snake method, boom, 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 turn. This is the higher low. Cool. And then here, now after we have the higher low, this becomes the high and this becomes the low. Anything between these 2 points, we don't care about. So something like this, something like this. Anything in between, we don't care about. So we're still in an uptrend until we break this low. Before we break this low, we're still in an uptrend. Whatever is happening in between, we generally don't care about. Boom, price was doing whatever it wants. We don't care. We're in an uptrend until we break this low, right? Dum, 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 dum. Okay, now we got a new break of structure, you see? So now this becomes the new high. And now you're wondering, where's the new higher low? You do the snake method. You go to the higher high, you draw a circle, and then you keep going down like this until you see the first turn. Oh, that's the first turn. So this is the higher low right here. You see how simple it is? And after this, we confirm that this is the higher high. This became the higher low right now. Perfect. Anything in between, we don't care about. We're still in an uptrend until we break the lows. Perfect. Whatever the market is doing in between, we don't care about. And then, boom, we broke the highs again. And we call it break of structure. After you broke this high, same concept again. You go to the higher high, you make a circle, you keep going down to see the turn. Boop, that's the turn. So this is the most recent higher low. Then this becomes the most recent higher low. And this becomes the most recent higher high. That's how simple it is. Literally, that's how simple it is. Now, you might be wondering, Omar, why isn't this the higher low? This is not the higher low. This is called something called swing low. We're not gonna talk about it in this video because this is, I trade this but in a different way, okay? Today I'm teaching you my scalping strategy, or a bit more between scalping and intraday, but I'm teaching you the recent higher low and recent higher high. I'm not teaching you the swing one. That one we're gonna talk about actually in this video but later. So lock in for that, okay? Because this strategy you can trade it literally. Scalping, intraday, swing trading. So you can take a trade and hold it for a couple of days. You can take a trade, hold it for 6 hours. You can take a trade and hold it for 1 hour. And you still get the same RR every single time. It's just how you read the trend and which time frame you're doing it on. So that's how simple it is. Now, let's just do a quick example with each other. Boom, let's say price does something like this. Boom, boom, we don't care, right? It can do whatever it wants. Boom, we don't really care. Boom, boom. You see? Now this right here is called break of structure, right? And after this break of structure, this becomes the high. Now you're wondering, where is the most recent higher low, Omar? We draw a circle, we go down, and the first turn, boom, that's it. So this would be the higher low. And then this one would become here. That's it. That's it. These are the rules. I hope you took a screenshot of it. And that's how simple it is. Now, same exact concept for the downtrend, but it's reversed. So instead of being an uptrend, now we're talking in a downtrend. So in a downtrend, instead of, you remember how we were saying uptrend consists of higher highs and higher lows? A downtrend consists of lower highs and lower lows. I know the names, if you're a new beginner, the names are confusing, but you'll get used to it, don't worry. So a downtrend consists of a lower high and lower low. So you see, we have a high, low, lower high, lower low, lower high, lower low. That's what a downtrend is. Lower high, lower low, lower high, lower low. When we break the lows, it's called break of structure. Every time we break the low, it's called break of structure. We break the low, it's called break of structure. It's like the confirmation, okay, now most probably the price is gonna keep going down. And then a lower high is only confirmed when we break the highs. Sorry, when we break the lows. And a lower high is only confirmed after we break the lows. So after we get a break of structure. So you see we got a break of structure, okay, cool. After this break of structure, this became the lower high, nice. After this break of structure, this became the lower high, nice. Same concept now. Let's say price does something like this, boom. Or like this. Is this a lower high yet? No, why? Because when we break the lows, it's called, a lower high is only confirmed when we break the lows. What about now? Now we broke the lows. When I say break, that means we went under it or went above it, which I also gonna explain after on the candles. You see? Boom. Bearish break of structure, and this would make this low right here. Sorry, this would make this high confirmed. So now this is a confirmed lower high. This is a break of structure. And that's how simple it is. See, high, low, lower, high, low, low, lower, high, low, low, lower, high, low, low, and just keeps going like in the same way. Now, I wish that's how the market looked like. That's just a perfect example. Now I'm going to show you a realistic example. A realistic example would be, we see we have a high, low, lower high, lower low. We got the break of structure. Anything in between, we don't care about. You see, boom. Anything in between here, we don't care about. We're still in downtrend until we break the highs. We broke the lows again, another break of structure. So now this becomes the high, and this becomes the low. Anything in between, we don't care about. Oh, we broke the lows. Now we do the snake method. You do like this, and then you circle around until you find the lower high. That's it. That's it. So after break structure, a new lower high is formed always. After break structure, always you get a new lower high. Everything between the lower high and the lower low is just called internal structure. Ignore the internal structure and use the snake method to confirm the recent lower high. Simple, super simple. See, high. We're gonna do a quiz, so you better focus. High, low, anything in between we don't care about. Oh, we had the break of structure, nice. This became the low. This became the lower high, nice. Anything in between we don't care about. Okay, we had the break of structure, nice. This becomes the low, and this becomes the lower high. Most recent lower high. Boom. And for people, advanced traders, this is called swing high, but we don't care about it now. Okay, let's do the snake method. This is the low. Oh, that's the first curve. That's the lower high. Perfect. And by the way, for all of this, there is an indicator that's going to show you all of this, but the indicator is not 100% accurate. That's why I want to explain everything to you in depth so you understand what's going on, and after that you can start using the indicator. But if you don't understand what's going on without the indicator, you're not going to be able to understand what's going on afterwards. Okay? Now, note number one. You see this push up, for example? This push up. This is called impulsive move. Just so you know the names. This is called impulsive move. So the price, when it goes up or down, like this, for example, you see the first push, the big push, is called impulsive move. That means the price pushed strong way. And then the push down right here is called a pullback. So once price is coming back, it's called a pullback, or some people call it retracement. Just I'm telling you, so when I use these words, you understand what I'm talking about. So this is a push, pullback. Push. What happens after the push? Pullback. push, pull back, push, pull back, okay? Now, after an impulsive move, we need a strong pullback, always. Have you ever seen someone drawing a higher low like this one right here? Something like this, very small? Never, right? So every time you want to see a higher low, I want it to be a proper move. I don't want to see these moves. I want to see something like this. This is a good higher low. But if you do it like this is not a higher low. I want it to be push, pull back, okay? So I don't want to see like these small candles, you're counting them as structure. Because if you do that, every 2 minutes you're going to find a new structure. No, it's got to be clean structure. I'm going to show you examples on the charts. Don't worry, don't rush, okay? So after an impulsive move, you need a pullback. Impulsive move, pullback. These don't count as pullbacks. And one advice I could give you actually is kiss it. Just kiss it, bro. Keep it simple. Stupid is the word, but I'm going to say significant. Keep it simple, significant. Don't overcomplicate it. Don't overthink it. It's very simple. You will get used to it. When we talk about it in the charts, you're going to even get it better. And I just need you to focus on these ones, okay? Now, even in the quiz, I believe you're going to even understand it better. It's just like keep it simple. If you start overthinking it, that's when you're going to fail, and that's when you're going to overcomplicate your life. I don't want you to do that. I want to keep the strategy as simple as it is. Simplicity is the key in trading, guys. If you still think complicated, complicated strategies are the way to become profitable, you're wrong. ICT might be profitable, but it's so complicated and it's so super not mechanical, super discretionary that you start asking yourself 1,000 questions before taking each trade. You might take a trade and ICT himself takes another trade. Why? Because it's opinion based. What I'm teaching you right now is a mechanical strategy. So that means no emotions, no thinking. It's pure probabilities, pure math, and that's it. Anyway, let's keep going. Now we're gonna talk about change of character, okay? So what is a change of character? It's the first step of trend reversal. So now you know what an uptrend is, you know what a downtrend is, but when do we switch from an uptrend to a downtrend? The first step for that is called change of character. So when an uptrend switching to a downtrend, the first step of that, okay, it's called change of character. This happens only after we break the recent higher low. In an uptrend, for an uptrend to have a change of character to a downtrend, this happens only and only after we break the most recent higher low. What do I mean by that? We have a low, high, higher low, higher high, higher low, higher high. The first step for the trend to start reversing is called change of character. Here, this happens once the price breaks the confirmed higher low. All right. So once you see like here we have the break of structure. Boom. We have this break of structure. After that, you see this recent higher low, we broke it. This is called change of character. Simple. Now, same concept for a downtrend switching to an uptrend. It happens only after we break the recent lower high. So you see how we have a high, low, lower high, lower low, lower high, lower low. Here, this was the break of structure, just so you understand why bearish real has. So this was, you see, let's do the snake method quickly. Boom. We go up, first, turn. Okay, this is the lower high, nice. This case is obvious, but I'm teaching you this because on the charts, it's not going to be as easy to spot. And then you see after that, after we broke that lower high, this is called change of character. Now I'm explaining to you more in depth, like how the candles, are we doing wicks, are we doing bodies, but it's coming soon, okay? So after we break that lower high, it's called change of character. Very simple. This is change of character is the easiest. Now after the change of character, the trend is still not confirmed. Like after you see this change of character, we can't just say directly here, okay, now we're in a downtrend. Or after the change of character, we can't say, okay, now we're in an uptrend. No, that's the first step. I'm like, okay, Omar, what are the other steps? That's exactly what we're gonna talk about now. We're gonna talk about the trend reversal, the complete trend reversal, the 3 steps confirmation, okay? 3 steps confirmation. So, for an uptrend to reverse to a downtrend, there's 3 steps. Step number 1 is called change of character. Step number 2, create a lower high. Step number 3, confirming the lower high with a breakout structure. So what do I mean by that? See, we have a low, high, higher low, higher high. Perfect. Higher low, higher high. Perfect. Now we're in an uptrend. First step, change of character. Boom. This was the change of character. Cool. Second step, create a lower high. So you see this right here? When price comes up, it didn't go and break the highs again. No. Create a new potential lower high. Perfect. Third step, break the lows again, aka make a break structure. Because now when you look at it, let's move it. Oh shoot, this does look like a 3 steps confirmation. Amazing. You see what I mean? That's how simple it is. Like now when you take this to the side, you're gonna see this is a confirmed downtrend. Now why am I doing it this way? Because sometimes after the change of character alone is not enough sign that we switch the trend from an uptrend to a downtrend. Why? Because market makers know how retail traders do. Like the people who, big institutions, banks, and all of these, they know how we're thinking. So most of people, once they see change of character, what they do is they start selling here in this case. And that's wrong. Because market makers know we're gonna do this. So what they end up doing, they start pushing the price up. And then they stop everyone out. You see what I mean? Just so we're not part of this, we wait for it to create a lower high, and then do a lower low, aka breaking the structure, and now we have a confirmed downtrend. You see, now we have a confirmed downtrend. So it's very easy, very simple. If you didn't understand it, rewatch it quickly, so you can be able to answer the questions right. Now, same concept for a downtrend reversing to an uptrend. You see how we have a downtrend here? High, low, lower, high, lower, low, lower, high, lower, low. So there is 3 steps. First step, change of character. Second step, create a lower high. Oh, I wrote it wrong. Create a higher low. And then third step, god damn it. Create a higher low, and third step is breakout structure. So, downtrend reversing to an uptrend. We have a high, low, lower high, lower low, lower high, lower low. Perfect. First step, change of character. Nice. Second step, create a higher low. Perfect. Third step, breakout structure. Amazing. Now we have a confirmed uptrend. Okay? And yeah, the reason, again, why we're doing this, after the change of character, usually people start buying here. We don't want to be part of that, right? Because sometimes the market makers would just do this and stop everyone out because they think they know what people want to do. But when you do this, like wait for higher low and higher high, it just makes it easier. So it's simple, just to simplify it. To know that you're in a downtrend, you need to see this pattern. And to know you're in an uptrend, you need to see this pattern. But after we have that change of character, okay? So always think about it. To have a downtrend, you need a change of character and breakout structure. To have an uptrend, you need a change of character and a breakout structure. Just in which direction we go into. That's it. Now, I'm gonna show you the trend reversal a bit better. Like I'm gonna draw to you how it usually would look like in a better way. So these are the rules, very easy, very simple. I hope you're taking screenshots of the things so you can be able to memorize them, not memorize them like that, but like, understand them, or if you're confused about something, you can easily read it and look into it. So, look, we're in an uptrend, right? Boom, boom, boom. We have a breakout structure here, this is the higher low, this is the higher low. And then, boom. What is this? This is the first step. It's called change of character. Nice. Boom, boom. You see? Now we're in a downtrend. Boom, boom. Okay, cool. That's the first step again, change of character. Boom, boom. Let's read it out together now. See, we have a low, high, higher low, higher high after this breakout structure right here. Perfect. So this becomes the higher low, this is the higher high. Now we have a higher low, higher high again. Cool. Boom, boom. Bullish breakout structure, nice. Now this is the higher low, right? First step, we got a change of character here. Boom. Bearish change of character. Nice. We did the second step, create a lower high, create a lower low. Perfect. Now we confirm the downtrend. You see? Bearish breakout structure. Now we have a confirmed downtrend. Then we created a new lower high, new lower low. Perfect. Now we're still in a downtrend. Bearish breakout structure. Nice. Now here, what did we have? What is this called? See, this was the lower high. Now we broke it. What is it called? It's called a change of character. Okay, cool. That's the first step. Bullish change of character. Nice. We created a higher low, higher high. Perfect. This is called bullish breakout structure. Nice. And now we can expect price to do something like this, like this, like this, and then at one point it's going to reverse again, and so on. Now I just want to make a quick note here. The price tends to continue the trend more than reversing. The trend, is your friend is saying, that's very famous, not because it's just because it's famous, you know. It became famous for a reason. It became famous because it makes a lot of sense. Let's say we're in an uptrend. Most of the time, you see, like most of the time, price is going to do something like this. And then after that, we're going to have a change of character. And then we're going to start going downtrend again. And we go in a downtrend. And then we reverse again. So the odds of having a breakout structure is way higher than having a change of character. Like you see, you have a breakout structure, and then change of character. Then you have breakout structure, breakout structure, breakout structure, breakout structure, then a change of character. So most probably, the trend will always continue rather than reverse. That's just, you know, statistically speaking. Because the market makers want to always catch the big moves. They want to always move the trend in one direction, and then big another direction, and another direction, and so on. So that's how simple it is. Now you know an uptrend. You know what an uptrend is. You know what a downtrend is. You know what a change of character is. You know how an uptrend reverses from an uptrend to a downtrend, how a downtrend reverses from a downtrend to an uptrend, and so on. So now we're going to talk about candle open and candle close. Now, I know most probably you know this already, but don't forget, we have some beginners who don't know this, so I'm going to go briefly about it. And then after that, we need this because we need to talk about this part as well, like if we follow the bodies or the wicks, you know what I mean, in an uptrend and in a downtrend. That's why if you don't know this, you need to know this. That's why I have to go through this real quick. So this green candle right here is called bullish candle, okay? I'm not gonna go why it's called bullish and why it's called bearish. That's useless. All you need to know is this green candle is called a bullish candle, and a bullish candle is basically telling you the price is going up. That's it. So when price goes up, that's called bullish candle. Now, when price goes down, it's called a bearish candle. That's how simple it is. Now, a bullish candle opens from the bottom. So you see from here, from the bottom, that's where the bullish candle opens. And where does this bullish candle close? It closes on the top. All right, easy. Opens from the bottom, close from the top. And everything in the middle is called body. That's it. Now, you see these little things hanging around the candle? These are called wicks. Okay, that's it. Now, funny enough, my whole strategy, my name is Omar No Wick, and my whole strategy is based off no wick candles. So candles with no wick, you know what I mean? But that's it, like that's pretty much what a bullish candle is if you want to break it down to 5 years old or someone like, you know, a beginner. But like in simple terms, that's what I'm trying to say. Now, a bearish candle, it opens here and it closes here. So that means once price, like, you know, the new candle opened, this is where it opens in a bearish candle. This is where it closes in a bearish candle. This right here is called a wick. And this is called also a wick. And everything in between is called a body. That's it. Okay, cool. So now you know where a candle opens, where a candle closes. Now, in the trend, you remember how we were charting out before? Now we're going to do the same, but instead we're going to look at some candles. So for body closure, we don't only look at the wicks, okay? For breakout structure and change of character, we look at the bodies, not the wicks. For breakout structure and change of character, we look at the bodies, not the wicks. So here we're in an uptrend. We have a low, high, higher low, higher high. Now this breakout structure is confirmed because this body right here closed above the body right here. Okay, that's why it's called breakout structure, because the body closed above the body. Now there's so many different ways to do it. Some people look at it, they want that body to close above the wick. See, they want this body to close above the wick. Some people would do, if the wicks above the other wicks, they count as breakout structure, something like this. You see, some people do it like this. Me personally, as Omar, it doesn't really matter which way you do, but if you want consistent results, do it the way I do, and don't keep changing it every 5 minutes, okay? So the way I do it is I need the body to close above the body. This way I call it breakout structure. Okay, you see the body close above the body. So is this a breakout structure right here? No. Is this a breakout structure? Yes. But not because it closed above, because this closed above the body. What about this one? Is this a breakout structure? Yes. You see the body closed above the body. Is this a breakout structure? No. Yes, it wicked above it, but the body didn't wick above, the body didn't close above the body. What about now? No, it's not a breakout structure. So you see, so just to keep it simple, doesn't matter where the wick is. It can be something like, let's say this one was like this. This one was like this. Boom. You see, just because the body closed above the body, we count it as breakout structure. Now, how much does it need to close above? If like this, like this, like this, it doesn't matter as long as it's closed, okay? Even if it's a tiny bit, doesn't matter. Tiny bit, big, a lot, doesn't matter. Breakout structure is a breakout structure. Same exact concept for change of character. You see, we're in an uptrend, and then the body needs to close below the body. So would this be a change of character right here? No. What about now? Yes. Okay, what about, let's say something like this. What about now? No. You're like, well, Omar, the wick below it. I don't care. What about now? Yes. What about now? Yes. Okay? Very simple. Body with a body. That's all you need to think about. Now, it's time for the quiz. I love the quizzes. So the way we're going to do this quiz, every time I'm going to ask the question, pause the video, answer the question first, and then play the video again so you know if you answer right or wrong. Okay? And if you answer wrong, don't worry, I'm going to explain why what you did is wrong or not. So let's do a quick quiz to test your knowledge. Is this right here a breakout structure? Pause it and then think. Well, the answer is no. You're like, why, Omar? We broke this. I'm like, yes, but let's analyze it together. So we have a low, high, higher low, higher high. Correct? Correct. So this right here is called breakout structure. Nice. Now, this becomes the higher low, and this right here becomes the higher high. Nice. This becomes the higher low, and this becomes the higher high. Amazing. Now, anything in between that, we don't care about. We only switch to a downtrend if we break the higher low, and we only get a new higher low or breakout structure only after we break this high. Now, before we do this, this is the breakout structure. Everything in between, just close your eyes. Don't think about it. Don't even think about it. Until we break this high, there is no breakout structure. So everything that happens in between, we don't care about. What about now? Now this is a breakout structure. Then this will become a breakout structure. You see? Like this. So this is a very common mistake I see people doing, and I don't want you to do it. Especially like my students when they join. This is one of the biggest mistakes I see that they do, which is a very common mistake. Now, question number 2. Which one is the recent higher low? In this case, is it number 1 or number 2? I'm gonna give you a hint. Focus on the word recent higher low. I'm not talking swing low, I'm talking recent higher low. Is it 1 or 2? Well, before I give you the answer, let's analyze it together. I had a low, high, higher low, higher high. Perfect. That's a breakout structure right there. Amazing. So this becomes the higher low. Or we can do the snake method, you know. Boom. We go first turn. This is the higher low. Nice. Now after that, this becomes the higher high. and this becomes the higher low. Perfect. Everything in between, we don't care about. After we broke the highs again, or why did I delete it? After we broke the highs again, this became the higher, this became a bullish breakout structure. So now we need to know, this became the high, and now we need to know, where's the most recent higher low? You remember the snake method? We circle it, we go down, first turn, boom. So the answer would be number 2. Now this would be something called swing low, but we're not talking about that for now. This would be the most recent higher low. That's it, very simple, right? So far, you see the strategy is very simple. We haven't gotten to the complicated stuff yet. If you keep understanding what I'm talking about so far, when we go to the more advanced stuff, you're not gonna struggle with that. That's why it's very important you take the basics step by step and take it seriously. Now, is this a recent higher low? And the answer is, let's see. So breakout structure, blah, blah, blah. I'm not gonna go over it again. We already did a couple of times, so you should know it by now. So this is the high, this is the high, this is the low. And everything in between, we said, we don't care about until we get the breakout structure. So you see, you might be thinking, yes, this looks very nice. It looks like a clean higher low. It's not. It only becomes a higher low after we confirm it. And you remember what we were saying earlier? A higher low is only confirmed after we get the breakout structure. So only after we get the breakout structure, this becomes the, then this is the higher low. Now, after we do this and we get this breakout structure, this would become the higher low, all right? That's why, because we didn't have, so after you ask yourself, this was the last breakout structure. Nice. Where we do the snake method, cool. This was the most recent higher low, perfect. Now, what do we do now? What about this? We don't care, this is just internal structure. Anything in between, we don't care about. And now when we broke this high, this becomes the higher low, and this becomes the higher high, and now we know, okay, this is the higher low. But until then, we don't. Now, the reason for this is, what about if price does something like this? You see, we're not gonna count this as a change of character. Why? Because we still didn't break this low. That's why don't get fooled by these potential higher lows. These what I call them potential higher lows, because it's got the potential. Only if we break the highs, then it's gonna become a confirmed one. Sorry. Until then, it's not a confirmed higher low yet. Now, question number 4. Is this a change of character? If you don't know this, I'm sorry to tell you, rewatch the whole video. This one is pretty easy, pretty obvious. Yes, this is the change of character. And question number 5, which one is the change of character in this case? Is it number 1 or is it number 2? Think about it, okay? Think. And I'm gonna give you a hint after. So we had a low, high, higher low, higher high. Nice. This was the first breakout structure. That's before I give you the answer. I'm gonna help you. So after we have this as a first breakout structure, everything is chill so far. This is the most recent higher low, and this is the most recent higher high. Everything in between we don't care about. Then we got a new breakout structure. So we got a new breakout structure here. Perfect. Bullish breakout structure. And now we want to move this to the most recent higher low, right? So where's the most recent higher low? That's the first question to be able to answer this. The first higher low, the most recent higher low is this. We do this, snake method, we go down, pop. Okay, so number 1 is the confirmed higher low, right? That's why we take this and we do something like this. Amazing. And then after we broke these, which one is the confirmed higher low? Well, it's number 1. That means the change of character is at number 1, not number 2. This here is the swing low. It's not the higher low. This is the higher low. So this is the most recent higher low. And after we broke it, we confirmed the change of character. All right? Very easy, very simple. You see, you just had to do a bit of more homework. You had to go a bit more, analyze a bit, and then you're going to be able to answer the question. But if you do it blindly, you're not going to be able to answer the question. All right, unless if you already know this information. Now, this is, I need you to focus on this one. Is this a change of character right here? Focus on this one. Think. Well, let's do it together. So we had a low, high, higher, low, higher, high. Amazing. This is the recent low. This is the recent high. Perfect. Higher, low, higher, high. Amazing. This became the most recent. This became the high. Became the most recent low. Amazing. Everything in between, we don't care about. Then we have high, low. We don't care about that, right? Everything in between, we don't care about. So now, why would this be a change of character is the question. Just like it doesn't make sense. Because this, let's forget about the last leg, okay? This right here was not the higher low. This right here was not the higher low yet. Because we didn't break structure. We didn't confirm this higher low. If we did, then that would make sense. But we didn't confirm it yet. That's exactly why this is not a change of character yet. You see what I mean? Or not yet. It's never going to be a change of character here. So only if we break this low, this would be a change of character. But this right here, we don't care about. Anything in between the high and the low, we don't care about. You see, anything in between the high and the low, we don't care about it. Now, if we do something afterwards, if we do something like this, well, then this would be a change of character because we broke the confirmed higher low. If we do something like this would be a breakout structure. Anything the market want to do in between, we don't care about it. Okay? And let me just put my charger. Is it charging? Oh, it's not plugged. Perfect. Now let's move to the next questions. Now, is this an uptrend or a downtrend? This should be an easy question. Is this an uptrend or a downtrend? Very easy, right? After the breakout structure, this became the swing low. This became the higher low, and this became the higher high. Anything in between, we don't care about. Yes, this might trick you into thinking, it's a clean downtrend, but it's not. Because we didn't break the lows, and because we didn't break the highs. Now I've been seeing this question like, Omar, but what about if this push was very big? What do we do in this case, Like, are we gonna stay forever? Well, most probably what's gonna happen is we're gonna create a new higher low and higher high, so don't worry about it. Okay, I'm gonna explain later, but like, even if this push is very big, no worries. Like, most probably price is gonna come a bit down and then break the highs again, and then you have a new higher low and everything, and you can trade again. So for this one, it's easy question, obvious uptrend. You don't need to overcomplicate it. Now, in this one, where is the higher low here? This is a very tricky one. So focus. And actually, you know what? Let me just give you a small hint. This is the breakout structure. Okay? That's all I'm going to. This is a hint I'm going to give you. So, very easy, but it's tricky. So you have a low, high, higher low, higher high, right? Amazing. Amazing so far. Then higher low, higher high. Perfect. So right now, this is the higher low. And this is the higher high, and this is the higher low. Now, what some people confuse here, they think, okay, for some reason, they think here we're in a downtrend, and this became a breakout structure or something, and this is the higher low. Don't do that. Just follow it step by step. Low, high, higher low, higher high, higher low, higher high. Perfect. This is the most recent higher low now, the snake method. Boom, this is the higher low. Anything in between, we don't care about. Until we break the highs, number 2 is not a higher low. Now, if let's say we go here and we do a breakout structure, then obviously after the new breakout structure, let's say we did this, after the breakout structure, we would have to do the snake method. We come here, We go back and most recent one, and this would be the higher low, okay? But until we do that, no, this is not a higher low. What is this, number 2? It's a potential higher low. It has the potential to become a higher low. But until then, where's the higher low? Number 1, all right? Now, question number 9 is a bit simple. I just want you to focus on the word confirmed. Is this a confirmed downtrend? Just focus on the word confirmed. I guess most of you guys would get it right. Is this a confirmed downtrend? No, it's not. Why? Because yes, we're in an uptrend. Yes, we had the change of character, but we didn't confirm it yet. We didn't do this and this after. And now we're gonna move to the last question, which is question number 10. And this one is gonna show me if you understood or didn't understand the market structure. And after this, we're gonna directly move to the charts to be able to read the trend together on the charts, all right? So, and the question is very simple. Are we in an uptrend or in a downtrend? Now, before you give me a quick answer, I want you to go through this properly, okay? Analyze it properly and then give me an answer. So mark out the higher highs, higher lows, and so on. Pause the video and then resume it, okay? And let's get it. So we have a low, high, higher low, higher high. Perfect. So this right here, bullish breakout structure. Now, this is the higher low. And this is the higher high. Amazing. So far, easy. Then everything in between, we don't care about. Then here, we had a breakout structure. Cool. Where does the higher high become? The higher high becomes here. Where does the higher low become? The higher low becomes here. Perfect. Anything in between, we don't care. Now, why is this the higher low? Snake method. We do this to first, curve, that's the one. Amazing. Cool. Everything in between, we don't care about. La 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 la. Okay, another breakout structure. Amazing. So we do this. Boom. Bullish breakout structure. And then this became the high. Now we want to know where is the low. Very easy. Snake method. You come here. Snake method. Boom. This is the new higher low. Okay? Most recent higher low. Perfect. Everything in between we don't care about. And then another breakout structure right there. Amazing. Boom. Breakout structure. Snake method. To pop. All right, cool. Amazing. So this becomes the most recent higher low. And this becomes the most recent higher high. Great so far. Boom, everything in between we don't care about. And then we realize, oh shoot, we had a change of character here. Nice. Now after that change of character, this became the low. And where is the most recent lower high? You do this, then it's this one. And then we had a lower high and a lower low. So this is the most recent breakout structure. Boom. Bearish breakout structure. And snake method again. I don't think we need a snake method for this one. I mean, it's obvious after the breakout structure. This became the lower high. And as you can see, now we're in official downtrend. All right, that's how simple it is. That's how easy it is. So now what we're gonna do is we're gonna be moving to the charts in order to be able to read the structure all together. And so we can do it, because theory is something and executing in the market is something else. So now you know the theory, now we're gonna execute on the charts. Now, just so you know, I wanna give you a heads up. You can add my free indicators, Omar Wick. It's completely for free, not like TGR or other big influencers who sell you their indicators. Just go on TradingView, you write Omar Wick, and it's completely for free. You get this indicator for free. And honestly, bro, I'm giving it to you for free. I know most people would sell it, but I was thinking okay, should I sell it or should I give it for free? And then I was like, bro, this indicator how much would I charge people for it? $20? Okay. If 100 people buy it, that's like $2,000. Honestly speaking, I'm good without that $2,000. But for some people, that $20, people are, let's say, from third world countries and stuff, they can't even afford paying that $20. So why would I do this to them? You know what I mean? So I'm better off, just as a gift from you to me, because I'm giving you this free indicator. All I want you to do is actually take this video seriously and this strategy seriously. And that's all I'm asking for. I'm not even gonna ask you for a like, comment, sub. I don't care about all of that stuff. Just take this video seriously. And that's your way of telling me thank you. Okay? So let's do it. So yeah, you get this indicator. It also helps you mark out, the market structure, like the high, the low, lower high, lower low, break structure, change of character. It's not very accurate. That's why I don't really depend on it. Otherwise, I would have skipped everything I just talked about and just told you, yo, use the indicator. Now add the indicator after you finish the video so you know how to use it properly, and let's get it. So we have a low, high. You see all of this is what I meant with consolidation. Like, don't start overthinking every single one of them, like don't start doing something like this. That's what I'm saying. So just count all of this, as a one leg. Like, don't overthink it. Don't zoom in too much thinking, okay, I want to read every single move. Just low, high, higher low, higher high. So now this is the higher low. And the higher high, obviously, we don't know it yet until we, the move finishes. Like until we, we have a new higher low and a higher high. Perfect. See, I wouldn't count this as a higher low either. Why? Because it's such a small move. Like, I want to see a proper move down. So that's why this is gonna be this our move. And now here, we broke this higher low. So what is this? This is called change of character. I mean, even the indicator is helping you here. So this becomes the low. This right here becomes the change of character. So now we have a high and a low. Perfect. This is still not a lower high yet. Why? We didn't confirm it yet. So anything in between this, we still haven't confirmed the downtrend. So I call this usually a neutral phase. After a change of character, but we don't have a break structure, I just call it neutral phase. Okay, amazing. Now we have a lower high, lower low, and I don't know where it's gonna be yet. And this would be the break of structure. Perfect. So let's keep going now. Nice. Oh, so this was here. This was the low, and this became this lower high. So high, low, lower high, lower low. And now what did we do here? We created a new lower high, new lower low, and we got, so this became the new lower high. Sorry, this became the new lower low, and this became the new lower high. And this, I mean, you see, the indicator says it already. This is the break of structure. Cool. Anything in between, we don't care about. We don't care. We're still in a downtrend until we break the highs. Okay, cool, cool, cool. Let we keep going. Perfect. You see? Now this became, oops. This, serious. So this became the lower low now. After this break of structure right here. That's why you see, like, sometimes the indicator, I'm telling you, it counts it wrong. That's why I'm not very dependent on it. Okay? Like, I'm gonna be honest with you. When I'm trading, I don't even have it, like, most of the time. So this is the break of structure. Now we do the snake method. You know, you're not sure. Is this the lower high? Is this the lower high? Is this the lower high? You're not sure yet, right? We do the snake method. So this was the lower low. We go, okay. You see why we're not gonna count this? Because this is very small candle. It's not a push, pull back, push. This would be just a push, beep, beep. You know, we don't want that. That's why we're not gonna count this one yet, or ever. So we just go like this. Let's go. Nice. Okay, that's the first curve. So this would be the lower high. All right. If you're wondering, by the way, what are these arrows? These are the no wick candles, which we're going to be talking about soon. This will become the lower high. this is the lower low, and we keep going. Anything in between, we don't care about until we break the highs. Until we break this highs, we're in a downtrend. Only when we break this highs, we become an uptrend. And until then, we're still in a downtrend. Cool. You see now we broke the most recent low again. Perfect. Where is my this? We come here like this. Template, bearish breakout structure. Amazing. Now where is the, let's say this is it. I don't know if it's gonna push more or not. Where is the most recent lower high? So we do the snake, we go up, boom. That's the first curve. You see, like if you're just looking at it like this, you would read something like this, right? Then this would be the first turnaround. And even here, I mean, the indicator is telling you this is the lower high, so that, thanks, that helped us. So this becomes the lower high, and this becomes the lower low. Anything in between, we don't care about. And we still like, I mean, we don't know where is the lower low yet until we confirm. Like maybe, I mean, maybe price is just gonna keep pushing without coming back. Oh, cool. You see, now here we had the breakout structure again. Oh, price pushed too much, too fast, I mean. So this became here the bearish breakout structure, and this right here became the high. Why is this the high? Again, snake method. After the break structure, you mark this. Boom, first turn. Okay, cool. This is the most recent lower high now. You see, now the indicator got it wrong, but this is the most recent lower high. Perfect. So anything in between, we don't care about. And then, finally, you see that downtrend, how clean it was. Finally here, we broke the highs, and we got now a change of character. So now that's the first step of us becoming an uptrend. So this change of character, I'm not gonna mark it out because it said it already. This is gonna be our first change of character. So first step of trend reversal, reversing from a downtrend to an uptrend. Now we got a low and we got a high, and now we keep going. Perfect. You see? Please God. I don't know what's going on. It just kept playing on. Okay, it's all right. So we had a low, high, higher low, higher high. After the change of character, we had this high, boom, price came back down a bit, and then we broke structure. So what does this become right here? This becomes the higher high after this breakout structure. Now, remember what I used to tell you? After every single breakout structure, we have a new higher low or lower high. In this case, it's a higher low because we're in an uptrend. We circle, snake method, boom. So this right here becomes the higher low. Perfect. Now let's keep going. So low, high. This became the high. Nice. You see, we created a higher low, higher high. Great. After this breakout structure right here. So now this is the most recent higher low. And now this is the most recent higher high. Okay, and now, why does this not count as a change of character? Although we, you see, this is what I meant when I told you before. If we wick below the higher low, we don't count this as a structure, as a change of character. You see, we wicked below it. We did body here didn't close, like we didn't have something like this to count as a change of character. This was just a wick, you see? So that's why we're still in an uptrend here. We don't count this as a change of character just because it's a wick. All right, cool. Amazing. So you see after this breakout structure, even the indicator is saying it. This becomes the higher high. Again, you ask yourself, snake method, where's the most recent higher low? You go like this, pop. All right, amazing. This is the most recent higher low now. I'm gonna try to find a change of character and then we can call it a day here. Or like stop with the trends and move to the strategy. Boom, boom, perfect. This became the higher low now. This became the higher high. See, why didn't I count this? Because it's a very small move down. But this right here, like, okay, it was a decent move. After this, boom, boom, boom. I don't like to count these small candles as structure. All right? And then let's see what happens after. This is actually a very clean trend. Like, you see how structured it is? I like these trends. Everything in between these two, we don't care about. Cool, we wicked below, we wicked above. We don't care about, as we said, breakout structure and change of character. We look at body closures. Oh, we look at body closures, not wicks. So after we had this breakout structure right here, let me just mark it out. After we had this breakout structure right here, boom. Now we need to look. We had the breakout structure. Now we need a new higher low. Where is that gonna be? Circle. We do the snake. Oops. Here we go. That's our most recent higher low now. Boom. Amazing. By the way, I don't do the snake and all of this in real life. I'm just teaching you how to do it so you can learn it easier. But once you become good at this, all of this becomes like, it takes you literally 2 minutes. Or not even, 2 minutes? 2 seconds to know. And then, actually, fun enough, this would be one of my trades. This would be something like this. This is my no wick strategy, actually. Just so I give you hints. See, when an uptrend, bullish no wick, then 1-to-1. And that would be my trade. And here you see we got a new higher low, new higher high. After this breakout structure, even the indicator is saying it. So we have the high, we still don't know where it is. Snake method, boom, boom. This is the new higher low. Keep going. Bullish no wick, price stopped. Oh, why am I saying the strategy? My bad, bro. It's a trade I've taken, that's why. So it's an automatic reaction. And yeah, price just kept pushing up. And then here we had price kept pushing up. Anything in between we don't care about. And then finally here we have the change of character. Here we have the change of character. I love how I start explaining the strategy by accident. So we have the change of character here, and yeah, the price will probably just keep going down, or it can do whatever it wants, okay? And yeah, usually after these big moves, like, I hate the market, but now most probably like price will do something like this, create a new lower high and lower low. So then that will become the new lower high and so on. But I just don't want to go too much in depth into this, like, so we don't take so much time on this. Funny enough, it worked here. The bullish no wick worked 1, 2, the no wick strategy, I mean 3. Yeah, that's a good one. So now you know like half of the strategy, because now you basically know everything about market structure. You know how to read the trend, how do trends reverse, change of character, breakout structure, 3 steps confirmation, the snake method. You know all of these now. So that's good. Now you basically know almost everything about, reading trends. Now, watching me doing it is something, and you actually doing it by yourself is something really different. Now, I'm gonna be honest with you. This is the best I can help you through YouTube, like through the videos. I can't help you more than that through explaining market structure. The only way I would be able to actually know if you're doing something right or doing something wrong in reading the trend is if I help you one-on-one, or if you're part of my community. If you're not part of my community, I'm sorry, I wouldn't be able to help you one-on-one. You know what I mean? Because otherwise, like I can record only much, on YouTube. So I try my best explaining this on YouTube on how to read the trend. Obviously, I have some other small tricks and hints on, or other indicators that you can use, but these ones are just special to the community. Maybe like when to drop to the 5 minutes to double check if this is a clean structure or not, or this the confirmed or not. These stuff I can't just share online, because otherwise if I gonna put every single small detail here, the video is gonna be 20 hours long, and I don't want to do that. So if you're serious about trading and you're actually taking this seriously and you want to become a profitable trader, and it's not like just something like, yeah, I want to try it out, if it works I will continue, if it doesn't I'm not gonna continue, then, and you still want to work with professionals, you want to work with me, you want to work with my community, with my group, and you want to become a profitable trader within the fast, like usually say within 90 days, but most people get profitable way faster than that. The only way to do it, in order to get personal help from me, and when I'm saying personal help from me, I'm not talking about pre-recorded videos like all these online gurus. They put some courses online, and then you join their mentorship, and then is basically the same things they post on YouTube. No, I'm talking about recorded videos, but not only that, because that's not the real value. The value is not the strategy itself. That I'm gonna show you after we finish talking about this. The real value is from learning one-on-one from me, from having one-on-one calls with me every week, from having group calls with me every week, from having the community with you, telling you when they win a trade, when they lose a trade. We send trades together, we take the trades together, we lose together, we win together. We do something called journal reviews. You get the roadmap where you have to backtest, you have to journal. I would have to see every single trade that you're taking and way much more stuff. You'll also be getting my personal journal to keep track of everything that you're doing, to make sure that you're doing everything right. Otherwise, I wouldn't be able to know if you're doing something right or if you're doing it wrong. That's the biggest problem. Now, regarding the market structure specifically, I would be able to help you to know, okay, you have to be charting in front of me so I can know, are you doing this thing right or are you not doing it right? Are you reading the trend right or are you reading it wrong? So all of this, I wouldn't be able to help you here. You know what I mean? But if you feel like you understood everything, then just keep going with the video. Otherwise, the way to do it is you would have to apply through the link in my description. After you finish the application, if you're qualified, you will be able to get a free one-on-one call with me or with one of my assistants where we talk about this more in details and you join our family. So now we're gonna talk about no-wick candles and the indicator to use in order to be able to spot the no-wick candles, okay? It's basically the same indicator that I told you about earlier. Okay, cool. So this is how a regular bullish regular bullish candle looks like. You see, we have a body, wicks on both sides. That's how a normal bullish candle looks like. That's how everyone knows these candles. Like, that's how everyone online knows. Now, a bullish no-wick candle looks like something like this, where we have a wick on one side, or this is not like necessary, but like basically a bullish no-wick candle has no bottom wick. That's all you need to care about. A bullish no-wick candle has no bottom wick, so it has no wick from the bottom. That's what you care about. That's literally what a bullish no-wick candle is. Imagine the whole system is based on this one candle. Same concept for the regular bearish candle. A bearish candle has a top wick and has a bottom wick. A bearish no-wick candle has no top wick. That's it. That's how simple. Like, if I'm explaining it to my grandma, that's how I'd explain it. A bullish no-wick candle has no bottom wick. A bearish no-wick candle has no top wick. That's it. Now, if I'm explaining it to an advanced trader, I will tell him this information. The percentage of these no-wick candles from all the candles ever printed is like 4%. Actually, like, not like number from my head. There is like a way to check it. 96% of candles have top and bottom wick. So only 4% of candles have no top wick or no bottom wick. Now, what does this mean? This means when the price opened, it directly after the price opened, or after, sorry, the candle opened, price pushed up immediately very strong. That's why it left no wick. You know what I mean? That's how strong the push is. The push was so strong that it didn't even go down a bit. No, it straight up went up. Same concept for the bearish no wick. A bearish no wick, that means once the candle opened, it straight away went directly down. It didn't even go up even a little bit. And these act like rejection zones. So once price comes back to the no wick, usually a price reject from them. Okay, that's what we're gonna talk about later on. And I'm explaining to you why, but it's not even that important. Like the why, you just care about making money, right? We don't care about the reasons why we're making money. But I'm like, even just because in case some people are curious, I see you guys asking me on IG, okay, Omar, your strategy works amazing. We have this win rate, we do this. I passed the funded, I gotta pay out, but why does it work? And because I get these questions a lot, I'm explaining to you. Now, what we're gonna do is, I'm gonna show you a couple of examples of bullish no-wick candles. You see where it has the arrow? These are the no-wick candles. So like this one, for example, this right here would be a bullish no-wick candle. This right here would be a bearish no-wick candle. This would be a bullish no-wick candle. this would be a bearish no wick candle, and so on. Like it's very easy. The indicator would directly tell you when you have a bullish candle, bullish no wick, and it will tell you when you have a bearish no wick candle. Okay. Now something I don't want you to do is, let's say you don't have the indicator on. That's where you're gonna mess it up, because let's say this candle right here, it looks like it's a no wick candle, right? And then you're like, Omar, why is the indicator not showing this is not a no wick candle? That it's a no wick candle. Well, if you zoom in, you will see, oh, it does have a wick. It's just so small that you can't even see it. And because I don't want you to go and, let's say, zoom on every single candle to see if it has a wick or not. To make your life easier, you go and you add my free indicator, like this one, for example. Like you might be like, okay, Omar, why doesn't it have the indicator? You zoom in, you realize, oh, okay, it's true. Like it has a small wick that I could just see by myself. All right, and you'll get other benefits from adding the indicator. Here you can see, you have a risk dashboard. You'll have, a win rate dashboard in order to be able to track how many wins you got, how many losses. This one don't touch. This one in case you just want to change the colors. You'll also get this no trading zone. Usually this is like a zone. We're going to talk about it later. This is a zone I don't like to trade because the price is very slow in that period, so I avoid it. You'll also get the sessions, like Asia session, New York session, London session. You'll also get the no wick candles, which is the most important part. You'll also get the market structure, the higher highs, higher lows, lower lows, change of character, break of structure, and all of these. All of these are included in my free indicator. You just go on TradingView, you type Omar no wick, no space, nothing, all small letters, and you'll find it. You see, if you leave a space between them, you're not gonna find it. So all small letters, Omar no wick. I don't think small or big matters. Yeah, it doesn't matter. Okay, but it's all one word. That's all you gotta do, and you add it, and then you get the indicator. Before you go and ask me what settings should I have, doesn't matter. Whatever you prefer, right? Like you don't need to put any different settings. Like, please, guys. Now I'm gonna show you how to set alerts. So what do I mean by alerts? Instead of you waiting on the charts to find the no wick candle, instead of you sitting and waiting for the no wick candle, you can do something called alerts. So what are these alerts? These alerts are basically when a no wick candle closes with no top wick or no bottom wick, whichever, you get a notification from TradingView itself to your phone. So when you get that notification, you know, okay, there is a no wick candle, time to trade. You know what I mean? So instead of you sitting on the charts and waiting for a no wick candle to show up, you can have a notification. Let's say right now I'm recording this video, I might get a notification. I would get the notification, hop on the charts, and see if I can find any valid setup, and so on. So that's why it's very important that you have this indicator. This alert. At the end of the day, guys, we started trading because we don't want to work a 9 to 5. We don't want to go to work 8 hours. So instead of you waiting for every single candle to show up and blah blah blah, you could just literally just set an alert, and this way you will get an alert whenever the no wick candle happens. Me personally, like, I'm not a big fan of doing this because I usually put 1 to 2 hours a day. I trade in these 1 to 2 hours and then I'm done. But some people don't even have that 1 2 hours. Some people, let's say, Alamin, one of my students, he works in a he has his own business and stuff, so he doesn't have time to sit on the charts. So what he does is he has the alerts. Whenever a no wick candle shows up, he gets the alert, he jumps, he sees, okay, is it good? If it's a good trade, he takes it. If it's not a good trade, he doesn't take it. And it literally takes 1 to 2 minutes to analyze the charts. You know what I mean? So in case you want to add the alerts, you press on this clock, press on create alert, okay? And then here, let's say for Forex or for futures, it doesn't matter. I'm gonna talk about this today as well. But let's say now we're doing USD JPY. You just put the asset you want or the pair you want, and then you press condition. You press on the indicator, Omar no wick, and then bullish no wick arrow. You put that one first. Same as chart, the 15 minutes basically, or you can put it in manually. You put 15 minutes, and then you go to trigger. You have to put it once per bar close. That means once the candle close, you would get the notification. You don't want to have it once only or once per bar. You want it once per bar close. That means every time a bar closed, you would get a notification, all right? And then expiration, you would just extend it as much as you can, let's say 1 month. And then you write whatever message you want. Bullish no wick, for example. And then notification, you can have it if you want it only in TradingView, if you want them to send you an email, show toast notification. I have my TradingView on my phone as well, so I can receive the notification on my phone. You can have it if you want by email, but then you're gonna be getting spammed every day. And then play sound, you can put whatever sound you want. Something like, I usually like this one, attention. Or where is it? Like you can have, let's say, I don't know, even a dog if you want. Or a whale. But usually, where's my best one? Obviously, don't put these ones. Imagine you get a notification and then you hear a dog's voice and then you're sitting with your family, right? You go on your phone and then you start, oh my God, what's going on? People are asking you what's going on because you hear the dog's voice, you rush into your phone, you want to see if you can take that trade or not. And then people can just think you're weird, trust me. So don't have a dog or something. Have it something like, I don't know, like you can have it like alarm clock or 3 notes reverb. My favorite one was cash, but I can't see it. You win as well is nice. This one I like. Anyway, choose whichever you want. Why am I going over this too much? You go over whichever you want, you choose whichever you want, and then you press create. And that's it. And then you'll start getting notifications. Here's the thing you gotta do. You gotta do it again, Omar Entry. So you have to do it twice for each pair or for each asset. So let's say for USD JPY, or let's say you're doing NASDAQ. For NASDAQ, you'd have to do it twice as well. Like for everything, you have to do it twice. You go Omar Entry, and now here, instead of bullish no wick arrow, you press on bearish no wick arrow. What does that mean? The bullish no wick means if you get a bullish no wick, you'll get a notification. Now we're gonna do it. If you get a bearish no wick, you also get a notification. So you put a bearish no wick. Again, here you do it 15 minutes. And then trigger once per bar close. Put the date, let's say 1 month. And then message, you write the message. And then the notification, you put the notification. And you press create. And now we have it perfect. Now this is not the account I usually trade on, so I just delete them. And that's how simple it is to put an alert. What else? What else? Yeah, unfortunately, to be able to do this, you would have to have a TradingView subscription. Even if it's the cheapest subscription, that's okay. That's not a problem. That works as well. But you still need to have a subscription, even if it's the cheapest one. And by the way, the money, it's not like me. It goes directly to TradingView, just so you know. But like this, to do this, you can't do it for free. So if you don't have the budget, it's like $10. But if you can't afford paying it, honestly, you could just stay on the charts for 1-2 hours and trade. Like most of the time, I don't have the alerts on. Like I mute them because I don't want to get so many notifications. But yeah, if you want to have it, you could do that as well. All right. So that's how you set an alert. So now we're gonna talk about what do we do in case we get news. All right. So there is very different type of news, and news are very, very, very extremely dangerous to trade. I'm gonna be completely honest with you. Most people blow their accounts because of news. So how do you trade news? First of all, there's 3 types of news. There's something called red folder, orange folder, and yellow folder. Right now, I'm on a website called Forex Factory. You can use Forex Factory or you can use whatever website you prefer. But this is the best website to check on news. So yellow folders means the news are not gonna have a huge impact most probably. That means once news come, it's gonna have a small impact. So the price is not gonna move crazy. Most of the time, it doesn't even have an impact. I'm gonna be honest with you. So yellow folders mean, okay, price is gonna move, but it's not gonna move crazy. Orange folders mean it's gonna move the price, but it's not gonna do a huge impact, okay? So it's gonna, let's say, move the market slightly. Like it's gonna be medium, let's say. Sometimes, rarely it has a big impact, but most of the time it doesn't. Red folders, these you should always avoid. Always, at whatever cost, because these are very unpredictable. No one can predict the price unless if you're like, you have inside information, but otherwise you cannot trade red folders, because price could either go up crazy or go down crazy, and we can't expect it. It's unpredictable. That's why, just to simplify, so you don't have this look, you turn off the orange, yellow, and gray folders, and you just keep the red folders. You see now it's way cleaner. So this, what does this mean? It's telling you here, and you can put it at your time zone. Here you press and you choose your own time zone. This is just an example, okay? So how do you do it? Let's say here it says 320 GBP red folder. That means at 320 on the GBP pair, we're gonna have high impact. So do we want to be trading GBP during that time? No. Here it says 330 USD news, red news. Do we want to trade anything related to, for futures traders, do you want to trade anything related to indices or NASDAQ or S&P 500 or something like USD JPY during this period? No. What about CAD, for example? That means at this time, we don't want to trade anything related to CAD. Now, I can't stress on how important it is to avoid trading news. And that's why I'm going to teach you what does Omar Wick do when there is news. But before I do so, I want to show you why I avoid news, and then I'm going to teach you how to act when there is a news, okay? So let's say we're in an uptrend. We enter, let's say we got a bullish, or you know what, it doesn't really matter. Let's say you're in buys, just to explain to you easier. Let's say you enter buys, okay? And then price is moving around, blah, blah, blah. Price is moving around here, let's say, something like this. And then red news come. Price could just dump like this. Just like that. Now, instead of, let's say, you losing $100, let's say you put that you want to lose $100, you might end up losing way more. And you can't blame your broker for that. Like, you can't blame the platform for that. Why? Because the price moves so fast. Sometimes price might be here and then suddenly it's here. So price doesn't even read your order. Okay, I want to stop loss here, you know? Like, I want to cut loss here. That's why it's very, very important that you don't trade news. Because news are crazy. Like, they just go crazy through your stop loss or through your TP. Now, if you're a swing trader, that's a different situation. But if you're a scalper or intraday trader, don't trade news, or at no chance, you know? Like, I can't stress how important it is to avoid news. Now I'm like, okay, Omar, but how long before the news should we stop trading, and like how do we act based on that? So let me just write news. Boom. So let's say the news is at, let's say at 3 p.m. Okay? News at 3 p.m. First thing first. Let's say you were in a trade. You're in a trade, and then 15 minutes left, and news are gonna drop. So what do? Close the trade 15 minutes before news. Okay? So before the news, 15 minutes before news, close the trade. If you're in profit, close the trade. If you're in drawdown, close the trade. You're better off. Trust me, that small loss that you're gonna cut is gonna save you so many future losses. So close the trade 15 minutes before news. Always, always, always. Second thing, you might be like, okay, but Omar, after that's done, when can I trade again? You can trade 15 minutes after news. So 15 minutes after the news drops, after 15 minutes, price usually settles down, and that's when you can trade again. So 15 minutes before news, you close the trade. 15 minutes after the news, you can take new trades. Sounds good? That's the rule. It's a hard rule. This rule you cannot break. And I can't stress how important this rule is. Now you'll be like, okay, Omar, let's say there's 30 minutes for news, 30 minutes left for news, and I want to take the trade now. What do you think about that? I'm like, okay, because you said, Omar, 15 minutes before news, I gotta close the trade. So if there's 30 minutes left, and now I can see an opportunity, let's say, to buy, should I take the trade or no? Well, realistically speaking, you can't predict when are you gonna hit TP or not. You know what I mean? And because you don't wanna be forced to close the trade, that's why, also this is a hard rule, don't take any trades 1 hour before news. So 1 hour before news, you stop taking trades. 1 hour before news, we're done. We don't take trades anymore. That's it. If you follow these rules, you're good. So in this case, 15 minutes before news, that means at 2:45, you close the trade, regardless of the profit or loss. And then you cannot trade new trades until 3:15. And don't take any trades, any new trades actually, sorry. Do not take any new trades 1 hour before news. So in this case, at 2 p.m., you cannot take any new trades. Because I know, yes, you might be like, okay, Omar, but from 2, I have 45 minutes to hit TP. Okay, most probably, yes, you're good. But then what is the hard rule? You know what I mean? Because then at 2:15, you're going to tell me, oh, but I got 30 minutes. At 2:30, you're going to be like, oh, but I got 15 minutes. Just to make it simple, just so we don't overcomplicate this, 1 hour before news, no more trading. And 15 minutes before news, we close the trade, regardless if we're profit or loss. So now finally we reached the point where we're going to be talking about the strategy. Now, I just want to say this, because I know some of you all just skip directly to this part. If you did that, you're not going to understand anything. Honestly speaking, you're not going to be able to understand anything. So I would highly recommend, or not even highly recommend, I don't even know why I'm begging you to do this. Go back, watch at least the market structure. If you don't do that, you're not going to understand what's going on. I'm going to be completely transparent and completely honest with you. If you want to compete in a market where 1% of people succeed, the least, I don't know how long this video is going to be, 4, 5, 6 hours. That's the least you can do. That's the bare minimum. If you want to become profitable trader, if you actually want to become someone successful in trading, the least you can do is put 4, 5, 6, 7. I don't even know how long this is going to be, and watch this video. So stop trying to cut, what is it called? Cutting this shit short. So go back, watch it, and then come back here, okay? Otherwise, it's up to you. You could still watch it, but I'm telling you from now, if you don't know the way I read market structure, you're not going to be able to understand the strategy, and then you're just going to be confused. You're going to waste time, and then you're going to go back there, and then you're going to come back here, and then you're going to realize, oh shoot, what did I do? So just to skip that, start from the beginning. I made this course in a very organized way. In a way, everything is followed by everything, so step by step. So go back and watch it. Stop trying to skip. And if you watch everything and you reached here, you're a G, all right? That means you're dedicated enough to stay this long in the video, seeing someone online that you don't even know, yapping, giving you value, and now you deserve to learn the strategy. So, the no-wick strategy, or 85% win rate no-wick strategy. I'm explaining in a very simple way, and then we're gonna go over the rules and all of that. As you can see here, we're in a clear uptrend, easy. We got a bullish candle with no bottom wick, easy. This means we're gonna be entering buys. So when we are in an uptrend and we get a bullish no wick, that means we're taking buys. So uptrend plus bullish no wick equal buys. Now, bearish no wick candle plus bearish trend or downtrend means we're gonna enter sells. All right. Uptrend plus bullish no wick, buys, bearish plus downtrend plus bearish no wick equals sells. Now, let's say you're gonna take this trade, right? That's where you enter the buy, stop loss at the most recent higher low, and take profit fixed at 1-to-1. And that's it. That's it. That's literally all I do. Now, I don't want you to enter directly after the no wick closes. So after it closes, I don't want you to be entering the buys here. No. You have to wait for price to come back to the no wick candle, and then you enter the buy, and then you expect it to hit TP. So the way it works, we see boom, boom, boom. Okay, we got the bullish no wick. That's where we place our buy limit. So we know, okay, once price comes back to the no wick, we're gonna enter the buy, and then price comes back, taps it, and then boom. Now, obviously, it doesn't need to just tap it and then reject. Sometimes we might see something like this, and then like this. You know what I mean? Sometimes it might be like this, and then like this. Sometimes directly. Sometimes we might hit stop loss. So obviously, that's not a 100% win rate strategy. So that is gonna happen. And the stop loss always here. Take profit 1-to-1. So after you place your stop loss, you make the take profit 1-to-1, and that's it. Simple, super simple. Same exact example for the sell. You see, when a clear downtrend, got a bearish no wick candle with no top wick. So we place our order here, stop loss, and the most recent high, and take profit fixed at 1-to-1. That's it. So once price comes back to the no wick candle, we expect it to reject from there. Now you might be wondering, okay, Omar, sounds good, but why does this work in the first place? So the reason why it works is, as I said, price moves in a balanced way, all right? It always moves in a balanced way. Now, when we get a no wick candle, that means price pushed directly, immediately up without even going a bit down. So it didn't even go a little bit down. When that happens, we're expecting price to come back to the no wick candle, create that wick. So now it created the wick for it, and then it's gonna go and hit TP. You see what I mean? So that's why it's like a magnet. Think about it as a magnet. Price is attracted to come here. Once it does, okay, now the magnet's effect is gone, and then we're gonna reject. Okay? Because the price always, once it leaves an imbalance, this is called an imbalance. Price left an imbalance. It didn't leave a balanced price. Price action, the market didn't do what it usually does, balancing the market out. So now when it comes here, now it balanced it, and then boom. Now you might be like, okay, Omar, but like, what's the theory behind the 1-to-1? Why can't we target 1-to-2, 1-to-3? Well, you can. But if you want to have this high win rate, then you gotta take it 1-to-1. Now you're like, okay, interesting, but explain to me further. How did you come up with this? So think about it. With a 1-to-1 RR, let's say you flip a coin blindly, and then either you buy or sell blindly. You don't know anything, you didn't read the market, nothing. Blindly you enter buy or sell. What is the odds of hitting take profit or stop loss? Well, it's 50% chance. Now, we add the fact that we're taking the trade with the direction of the trend. So we're only trading with the trend now. What are the odds now? Now it pushed up to 70. Okay, cool, but now we got the no wick as well. Okay, now it moved to 85. Now, obviously, there's more rules to this, which we're gonna cover now after this. But like I'm explaining to you first simply, so you understand the basics, and then we can build up to the more advanced. So that's how simple it is, okay? I know, like, you don't need to worry about why it works. I explained it to you. Some people get it, some people don't get it easily. But regardless, honestly, we don't care. Maybe even if it's a glitch in the market, we genuinely don't care. We care that it works. There is another theory why it works is whatever reason caused the no wick here. So as I said, this is a big push. That's why, like, it's a very strong push. So whatever caused the market makers to make this push, when price comes back to the no wick, for the same reason they're pushing the market again. Anyway, one more note actually. Price doesn't have to come back like within one candle. It can come up, count down within 2 candles, 3 candles, 4 candles, up to 10 candles. So that's also something we're gonna talk about soon in the rules, because I have a list of rules that I'm gonna be sharing with you. But yeah, so just so you know, it doesn't need to be the exactly candle after it is coming and then boom. Okay? So now let's have a look on an example. This is a perfect example. Like, realistically speaking, it's not gonna look like this. I'm gonna show you after this. By the way, I'm gonna still show you like this, and then I'm gonna explain it further, more in depth. And then we're gonna, because once you understand everything, that's when I can show you the real charts and we can do live backtesting on how it looks. So you don't tell me, oh, Omar, you're cherry picking. No, like, don't worry about it. Simple. We have a low, high, higher low, higher high. Amazing. So low, high, higher low, higher high. Even the indicator here is telling us this is a higher low. Great. Then what did we get in this uptrend? We got a bullish no wick candle. Beautiful. So far, so good. What do? We place our buy limit at the no wick candle, stop loss at the most recent higher low, and take profit fixed at 1-to-1. That's it. Okay? Now what do? We wait for price to come back to the no wick candle. All right, let's see if it's gonna do that. I know it's gonna do that. I've already seen the results, so just so you know. Perfect. So now you see 1, 2, 3, 4. Price came back to the no wick within 4 candles. Amazing. Now we enter the buy. As I said, stop loss at the higher low and take profit, fix that 1-to-1. Now you just set and forget. You don't have to do anything. Now you just wait. Now it's the waiting game. You could go sleep, shower, eat, do whatever you want, honestly. And then, boom. And that's how simple it is. So we had our entry here, and then we hit take profit within like 1-2 hours, and that's it. Literally, that's all I do every day. That's how all the results I showed you, that's how all the money I make. Everything that I do is based off this, literally. That's it. Now, there is more rules, which we're gonna cover, and basically that's it. So if I'm explaining to you in simple terms, this is literally it. Now, obviously, to keep this high win rate, there is more rules that we're gonna take into consideration, which we're gonna talk about now. But literally all I did. See, you can mark it like this if you want as well. 0 drawdown, and that's it. Now, that was a perfect example. Now, realistically speaking, the charts are not gonna look always that clean. Like, yes, this was a very clean chart, and I wish every single trade would look like this, but realistically speaking, the market is not always gonna look like this. It's gonna be looking something like this. So how do we take the trade in this situation? Let's see. So we have a low, high, higher low, higher high. Perfect. See break of structure here. Boom. Boom, boom, boom. Everything in between. The low and the high we don't care about. And then we had another break of structure here. Perfect. Boom. So now this becomes the higher high, and this becomes the higher low. Amazing. Everything in between we don't care about. Okay. Had another break of structure here, so we mark it out. Usually most probably the indicator is gonna mark it out. Break of structure, amazing. By the way, you don't need to write these break of structure. I don't do them in real life because you're gonna see them, spot them easily. So you don't have to mark them out like how I'm doing right now. It's just I'm doing it to teach you all. And now, okay, where's the higher low? We do the snake method. We go to the top. We go down to see the first curve. Okay, perfect. That's the first curve. So that's how we know this is gonna be the higher low. So what do we do in this case? We enter buys here at the no wick, stop loss at the higher low, and take profit, fix that 1-to-1. That's all you gotta do now. So this is the stop loss. And now we can expect price to do something like this, come back to the no wick, and then boom. Okay? Literally, that's it. Now, if you watch the market structure properly, you would understand what's going on here. If you went and watched the market structure, you're gonna understand what happened. If you didn't watch the market structure part, you'll probably be like, yo, what is this guy talking about? Anyway, now realistic sell example, same concept, but here I made a trick on purpose because I want to see if you guys are focused or not. All right, so we have a high, low, nice. So that would be a bearish break of structure. Then we got everything in between we don't care about. Boom, everything in between we don't care about. And then this became the low. And here we had the break of structure. So now we do the snake method. This is the low. Oh, okay, cool. This is the new high. Amazing. Everything in between we don't care about. And then we got a no wick candle here. But look what happened, guys. We just wicked below it, but we didn't close. So this candle didn't close like this, right? It just wicked below it. So that means it's cool. Can we still take the trade? Yes, obviously we can. That's how we would take the trade. But we wouldn't have our stop loss here. This is a very common mistake I see new people who or my students when they start, they do. You don't have it here. Why? Because this is still not a confirmed lower high. If this was like this, and this was like this, then this would be a confirmed lower high. But yet, because we didn't do that, and it looks like this is the lower high, right? After the swing, we decide this is the lower high. Sorry, after the snake method. So all we do is now we move our stop loss. We have our stop loss here. Take profit, fix that 1-to-1. And now what we can expect to do, the price to do, come back to the no wick, we enter the sell, and then boom. Super simple. If you understood the market structure, you're gonna understand this super easy. And I mean, it is easy, you know, like no need to overthink it. Literally, that's all I do every. Damn, I need to fix my handwriting. Every day. Hey, if y'all see me a bit sleepy, you gotta excuse me. It's 6 a.m. Just so y'all know how dedicated I am to delivering this video to you guys. It's literally 6 a.m. I'm filming this whole video, by the way, in one take. Like, I filmed a bit, and then I went, I ate, I rested a bit, went on a ride, and then I came back and I'm recording this. So just so you know, this whole video is recorded in like one day. I hope at least I get some people profitable after watching this. That's gonna be, you know, that's gonna be like my reward after it. If I see people getting profitable after this, I'm happy, honestly speaking. Like, because this took me a lot of effort to make and took me a lot of time. But as long as I see people becoming profitable, I'll take that. All right. So now what we're gonna talk about, we're gonna be talking about A setup and a C setup. So what is the A setup? What is the C setup? And you might be wondering what happened to the B setup. I'm gonna tell you. Okay, cool. So as you can see here, we're in a clear uptrend. We had a change of character, so that's the first step. And then we got a bearish no wick candle. Now, is this a valid trade? Technically, yes, because technically we are in a downtrend. So if price comes back to the no wick candle here, we would enter the sell, and you would have your stop loss at the highs, right? But that would be a C setup. Why is it called a C setup? Because it has a way lower win rate. This has like a 70% win rate. Now, do you want to be part of trading C setups? You could. Me personally, as Omar, I don't trade C setups. I only focus on A setups. So basically, a C setup is when the trend is still not confirmed. That's when you can take the trade. Most people trade C setups, by the way, online, you know, like, or different strategies, or other no wick traders. Some of them trade, you know, C setups. But my students as well, like, I've seen them a lot of them. They take the C setup, but they're okay with it. They know, okay, we got 70% win rate only. But me personally, as Omar, I don't like C setups because I don't want to lower my win rate. I want to keep it always high because it's easier for the psychology. That's why I avoid trading C setups. All right? Because I'm always scared, like, okay, after the change of character, the trend's still not confirmed. So what if price does something like this? Because there is a high chance that happens, right? So that's why me personally, as Omar, I don't trade C setups. Now, what is the A setup? A setup is basically when you see how we're in an uptrend, we had a change of character, we had the break structure, we did the 3 steps confirmation, and we got a bearish no wick candle. So an A setup, in simple words, is when we have a clean trend like this or like this. So it's when we have a change of character, break of structure, and that's it. So it's basically, you could say an A setup is after we do the 3 steps confirmation and we get a no wick candle in the same direction as the trend. That's it. Like what I just showed you before, that would be an A setup. So we have a high, low, lower high, lower low, bearish no wick candle with no top wick. Place our sell limit. Something like this. Why is it looking like this? We'll place our sell limit here, stop loss at the most recent lower high, and take profit fixed at 1-to-1. All right? That's it. That's literally it. High, low, lower high, lower low, bearish no wick. Now, once price comes back to the no wick, I can expect something like this. Easy, right? Very easy. So yeah, that's it pretty much for the A setup and C setup. Now this is like, if you want to look at it at a perfect example of a C setup, perfect example for A setup. Now realistically speaking, that's how the market's gonna look like, right? The market doesn't always move clean, but yet we want to be able to benefit from it. So for the C setup, I'm not gonna go too much in depth. You see, like, we had a low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. We had this change of character. This doesn't mean we can enter the trade because there is a high chance market does something like this afterwards, right? But a realistic example of an A setup is like this. Boom, low, high, something like this. Low, high, higher low, higher high. We had the breakout structure here. Perfect. Higher, sorry. Let me just draw it. Boom, boom. Then everything in between we don't care about. Then we had another breakout structure. So this became the swing, the higher high. This is the breakout structure. Perfect. We do the snake method to know where's the higher low. So boom, snake, and this is the tail, that's the curve. Perfect. Now we know where's the higher low. So this would become our higher low. Then we broke that. Now we had the change of character there. So this became the low, this became the high. Everything in between we don't care about unless if we break this high or until we break the lows. Everything in between we don't care about. Okay, cool. We broke the lows. So that was a breakout structure. Now this is the low. Okay, where is the most recent lower high now? Snake method. Boom. Oh, up. All right, perfect. And now this would become our lower high. And this will become our lower low. We got a bearish no wick candle. Perfect. That's where you enter the sell. Stop loss at the most recent lower high. And take profit. Fix that 1-to-1. Like this. And take profit, fix that 1-to-1. And that's it. And now we can predict price to come back like this. And then boom. All right. Very easy, very simple. I just wanted to show you like how a realistic chart is gonna look like, because I don't want to, give you an example. Because when I used to learn trading back in the days, I remember people used to always, chart out stuff and all of this. And I'm like, okay, cool. It looks easy when they're charting, but they always draw it perfect for some reason. Like they're always doing something like when they explain, these gurus, when they explain an uptrend, they always draw it like this. I'm like, okay, but that's not how an uptrend looks like, It doesn't look like this. It's more realistically, it's gonna be something like this, and this, and then we're gonna, So I never found someone to be able to help me and explain the way I'm explaining it, because I'm explaining it from a beginner's level to an advanced level, because that's how everyone started as a beginner, but not everyone can reach the point where they're advanced. So my goal is to be able to explain the beginnings and the advanced way all in one video. Why? Because now, what used to happen to me as well, I used to go to these online YouTube videos, I watch them, and then one guy explains it very simple, cool. I go try it out, I feel like it's complicated. I go to this other guy, he explains it in a good way, advanced way, but then he reads the trend different than the guy who explained it simple. And I don't know what he's talking about, because he's talking very complicated terms. This is exactly why I try to start simple and then elevate it to advanced. Cool. So what do we have now? Now we're gonna have the quiz. Now we're gonna test your knowledge in it. So now, as you can see here, I told you guys, it's 6 a.m. Don't blame me, I'm sleepy. So now, question number 1. Where should your stop loss be in this case? When you take this trade, where should your stop loss be? Should it be at number 1 or number 2? Pause the video, think, and then answer. Well, let's analyze it together, okay? So low, high, higher, low, higher, high. Perfect. I had the breakout structure here. Amazing. This is the higher low. and this is the higher high. Everything in between, we don't care about. Boom, boom, boom. Okay, nice. We had another breakout structure. This became the high. And now you might be thinking, where is the most recent higher low? Cool. We do the snake method. We draw the circle. Oh, is that the higher low? Yes, it is. Cool. See, that's exactly why I always stress about understanding the market structure properly. That's why I went and I talked 1 hour, 1 hour and a half on market structure. Because if you don't understand that, you're going to get almost everything wrong. Now, where do we put our stop loss? Put it at the most recent higher low. See? And then take profit, fix that 1-to-1. And now we can expect price to do something like this. Boom, boom. All right? That's how simple it is, guys. Literally. You see, what you just have to do always, the extra work. Zooming in, reading properly. If you don't do that, you're not going to be able to understand it. Or you're just basically guessing. We don't want guessing. That's what I'm telling you, it's mechanical. Because whatever you do, I'm going to be doing. When my students win, they all win together. They all lose together. And when they win, I win. When they lose, I lose. When I take a trade, even if I don't send it to them, I know they're taking the exact same trade. When I take a loss, I know they're also taking that loss. They're taking the exact same stop loss, exact same take profit. We all take the exact same trade. But we just, even without discussing it. Now, recently, we've been talking together before taking the trades. That's how we made it. That everyone has to share the trade. So whenever anyone sees a trade, we always send it on Discord. And we start talking together about it. Like, okay, what do you think about this trade? What do you think about this trade? Yeah, no. Oh, no, be careful. It shouldn't be 1, it should be 2 because this is the most recent higher low. Oh, no, be careful. We didn't break the structure, blah, blah, blah. Yeah, wait, be careful. We had a change of character, but we didn't confirm the trend yet. Why? Because we didn't have the 3 steps confirmation. So always helping each other. This is the way you grow. When you have surrounding with you. Even me personally, who reach a really high level, sometimes someone might correct me. You know what I mean? Sometimes I might do a genuine mistake. But when I see someone correcting me, that's how I grow. And that's me, who reach a really good level in trading. So imagine you as a beginner, for example, or you someone who's learning the strategy in you. If you don't have a community surrounding you, helping you, that's where your psychology is always going to be ruined after you take a loss. Because you don't know why you took the loss. You don't know if people took the loss as well. You know how like, this is bad to say, but you know how it feels easier if you take a loss, but you know someone else took a loss. Like, imagine you take a loss and I took that loss too. How would you feel about it? You'd be like, okay, cool. It's part of the game. Even Omar took this loss. So now you know you didn't do any mistake. The trade just didn't work out. You know what I mean? That's why it's good to be with a community, with a family, where people support you and you support them. Anyway, question number 2. Where should your stop loss be? 1 or 2? Now I'm like, oh my, this looks the exact same. No, it doesn't. Focus. I need you to actually focus. I'm going to just give you one hint. It's a tricky one. That's all I'm going to tell you. Well, if you answered 1, your answer is wrong. And if you answered 2, your answer is wrong. Now let me explain to you why. Like, what? Oh my, what? So we had the low, high, higher low, higher high. This is the first breakout structure. Perfect. So this is now the higher high. This is the higher low. Perfect. Everything in between, we don't care about. So this is going to be the higher low until we break below it. This is going to be the higher high until we break above it. Here, we didn't break above the highs, and we didn't break below the lows. What does that mean? That means we don't care about these. So where's the higher low? It's this one. So the answer would be number 3. In this case, it's here. So you'd have your stop loss all the way down and then take profit 1-to-1. All right? If you fell for this trap, it's okay. It's a tricky one. I'm not going to go hard on you. But you see, that's why you got to focus. And if you didn't fall for it, good job. I'm proud of you. Now, question number 3. Is this a valid trade right here? This bearish no wick. Think. This one is easy. This one is easy. If you watch this whole time, this one is easy. I'm not even gonna go too much in depth into it. We had a low, high, higher low, higher high, higher low, higher high. Boom, boom, boom. Change of character here. So we had the change of character. Then we created a lower high. And then we had a breakout structure. And boom. Then we got the no wick candle. That's when you enter the sell on the no wick candle. Boom. Stop loss at the lower high and take profit fixed at 1-to-1, and that's it. All right. And here you do the snake method, obviously. You just do this, and then, oh, this is the lower high, and, you know, the rest is easy. Where is the correct stop loss in this case? 1, 2, or 3? This one also is a bit tricky, but let's go through it. So we have a high, low, lower high, lower low, lower high, lower low. What does this mean? This means this is the lower high, and this is the lower low. Perfect. Now here, look what happened. This candle didn't close below it. It just wicked below it. So what does that mean? Does this count as a break structure? No, it doesn't. You see? So where would we put our stop loss in this case? We'll put it at number 2. Why? Because we didn't have the breakout structure here yet. So that's why the most recent lower high in this case is number 2. So we'll have our stop loss at number 2. I don't know, for some reason, when I'm doing this, it's going all the way up. You know what? It's all right. So your stop loss would be at number 2 and take profit would be at 1-to-1. Now, where is the correct stop loss in this case? This one should be easy. You see, this one would be number 3. Why? Why would it be number 3? Because we had the breakout structure here. So can you tell the difference between the question 4 and question 5? Bearish breakout structure. In question number 4, we didn't break the lows. We just wicked below it. So this candle, when I say break, I mean we didn't close. You see, remember how in the beginning of the video, when we were talking about how candles open and close, and the candle close here? See, this one didn't close below. It closed here. While this one, it did close below. That's why it's called break of structure. That's why number 3 now is the lower high, because this becomes the lower high and this becomes the lower low, for example. And we do the snake method, and then and it's obvious here. Cool. Now, we're almost there, by the way. We're almost there to start showing you the examples on the charts. Now, is this a valid A setup? Is this a valid A setup? Think. We have a low, high, higher low, higher high, higher low, higher high. All right. Everything in between, we don't care about. Amazing. Whatever price does in between, we're in an uptrend until we break below the lows or above the highs. That's when we get a new higher low. So as you can see here, we didn't do that. So that's why this is not an A setup. It's not even a valid trade in this case. Why? Because this candle didn't break below the lows. Okay? So this is why we don't count this as a valid trade or a valid A setup at least. Cool? Very easy. I think most of you guys would get it right. I believe, I hope. Now, this is a tricky one. Is this A setup? Think. Before you answer, I want you to think properly. So we had a low, high, higher low, higher high, break structure here. High, low, higher low, higher high. We had another break structure here, and then higher low, higher high. We had another break structure here. I'm just so I don't keep yapping. So that's the higher low. Not yapping, repeating myself. So boom, snake, boom, boom. This becomes the higher low. Amazing. Then we had a change of character here. Cool. After that change of character, we got a bearish no candle. You see? Now here's the tricky part. This candle didn't close below here. So we didn't get a break structure. So I'm gonna ask you, did we get the 3 steps confirmation now? No, we didn't. Why didn't we? Because this candle didn't close below. So this is still not a confirmed downtrend. Is it more like a downtrend than an uptrend? Obviously, we had a change of character. Is it a confirmed run? No, it's not. That's why this trade wouldn't be valid. What about this one? Think quickly. It is. Why? Because you see this candle, same exact concept that I just explained here. Only difference is after we had the change of character, right here, we also had a breakout structure here. That's it. Literally, that's it. You see? And now we can expect price to do something like this, come back to the no wick, tap it, stop loss at the lower high, and boom. Okay? And now I believe this should be the final question. I hope you guys understood these, by the way. Now this is the final boss, final question. Which trade would you take here? The bearish one or the bullish one? Yeah. I gotta start hitting the gym again. Low-key getting skinny. Oh, I've been recording a lot of content. Been trading. Teaching students. What else? What have I been doing? Literally, that's all I've been doing. Seeing my friends. I don't even see my friends no more. Like that. Like I see them once a week probably. Yeah, once a week. I don't even, look, I haven't been even meeting my family. Yo, that's sad, man. No. Hey, why am I yapping? My bad, chat. Anyway. Bro, I'm telling you, listen. When I don't sleep, I low-key start tweaking. I still haven't slept yet, so, and it's 6 a.m. That's why I'm like, okay, I need my full focus. Actually, you know what I'm gonna do? After this question, I'm gonna go drink a cup of coffee and then I'm gonna be back, yeah. That would be nice. So I can, lock in again. Anyway. So we have a low, high, higher low, higher high. So this will be the first break of structure. Then high, low, boom. You know what? Actually, I need to go through this properly. I don't want to, because this is the most important one. So I don't want to skip any small detail. So low, high, higher low, higher high. Perfect. Then, after that, this became the high. This became the low. Everything in between, we don't care about. And then we had breakout structure here. So this became the high. Boom. Bullish breakout structure. And then, where's the most recent higher low? We do the circle. Snake. Top. Perfect. So now this is the most recent higher low. And now everything in between, we don't care about. And then you see this candle? It wicked below the higher low, you see? But what it didn't do, it didn't close below the higher low. You see what I mean? That's something very important that you lock in on. It didn't do that, so it just wicked. So that means we're still in an uptrend. And then we got the bullish no wick candle, aka we're still in an uptrend because we didn't break the higher low. So the answer is I would take the buys here, stop loss at the higher low, and take profit fixed 1-to-1. Why? Because we're still in an uptrend until we break this blue line. So think about it. When does the uptrend become not a valid uptrend? Only when we break the lows, which didn't happen in this case. Now, obviously, like this, I don't want to go too much into this because this situation doesn't happen very often. Obviously, I wouldn't be very confident in this trade, seeing that we in an internal downtrend with a bearish no wick. So I wouldn't be very confident taking this trade. But on theory, this is still a valid trade. So this is the valid trade on theory. Now, practically, That's what we're gonna do when we go to the charts. So I show you exceptions and how to do all of this. And so yeah, now I hope you passed the quiz. If you got like 7 out of 9 answers right, I would say that's good. So now we're gonna talk about something called an Omar entry. So you already know now the strategy. You know if we're in an uptrend, we get a bullish no wick. Price usually gotta come back to the no wick. And then once it does, that's when we enter the buy, and then boom. That's easy, right? But sometimes what price likes to do is come very close to the no wick, but doesn't tap the no wick, and then it goes and hits take profit. And then this happened to me so many times, or not so many times, but it happened to me. It happens like 30% of the time. And I was like, okay, Omar, do you want to keep missing on these trades? Obviously not. So what's the solution for that? The solution is the Omar entry. So what we do is, instead of waiting for it to tap the no wick, you enter 2 pips earlier. So that's in terms of Forex. In terms of for the future traders, I'm gonna explain to you later in ticks. So let's say your stop loss is 14 pips, it would become 16 pips, right? So you would just enter 2 pips here. 2 pips before the no wick candle. So this is the no wick, 2 pips before that, that's when you can enter that trade. So simple rule, if the stop loss is more than 10 pips, you can enter 2 pips earlier. Now, what if your stop loss was already too small? Would you do the same thing? No. You do this only and only if your stop loss is more than 10 pips. So you see here, your stop loss is more than 10 pips, that means you're qualified to enter 2 pips earlier. Now, I could go in depth about this, like why 10 pips specifically, and the reason is, let's say your stop loss is 5 pips, like this. And then this is your 1-to-1, just for example, right? If you would enter 2 pips earlier, in this case, you see your risk to reward got ruined. So when you make it 1-to-1, that means you're basically asking the price to move so much up in order to hit the 1-to-1. While on the other hand, when your stop loss, let's say, is 20 pips, that's the 1-to-1. When you enter 2 pips earlier, you see your RR went from 1-to-1 to 0.8. So now when you make it 1-to-1, that's not a huge difference. That's why only do the Omar entry if your stop loss is more than 10 pips. Okay? So that's how simple it is. Just think about it like this. If your stop loss is, let's say, here. Now in this case it's 14 pips. Cool. 1-to-1. Cool. We can enter 2 pips earlier. So we make it 16. And obviously then you can make it 1-to-1 again. Now, the reason why I read it from down there is just like basically you could just measure it like this. You know what I mean? Like you make it 2 pips. It's just like, I got used to reading it from down there. That's literally all I do. That's how simple the Omar entry. Like, don't overthink it, don't overcomplicate it. It's very simple. Same concept here. You see, boom. Our stop loss is what? 14 pips. Perfect. So I can enter 2 pips earlier, and then I make it 1-to-1. That's it. So now if price decides, okay, I don't want to tap the no wick, comes close to the no wick, that's when we enter the buy, and then boom. All right? Easy, light work. Two. And now we're gonna talk about trading sessions and which session you should be trading the no wick in. So to start, we have 3 types of trading sessions, or 3 trading sessions. You have, first one is Asia session, and then second one is London session, and third one is New York session. So the Asia session is basically when the banks in Asia are open. Like, let's say Tokyo. Japan is very famous in this. So, and it's actually the name of it is, some people call it Asia, some people call it Tokyo. And there's also Sydney in it. But like, just simplify Asia session, okay? So this means the banks in Japan are open during the Asia session. What do I mean by session, by the way? Let's say, I don't know which country you live in. Let's say you live in EST. In US and your time zone is EST. So let's say from this time to this time, this would be Asia session. From this time to this time, it would be London session. From this time to this time, it would be New York session. Now, how do you know what time zone your session is? Well, it's easy. Through the indicator, you will have the sessions and it will automatically convert into your time zone, okay? Now, you don't need to overthink this because the best part is you can trade any session using the no strategy except the no trading zone. Anyway, which I will also talk about. So in the Asia session, That's when we said that's when the Asian banks are open. London session, that's when the European banks are open, like England. It's called London, I mean. And then New York session, that's when the Wall Street is basically open. You know, in New York, when they open the Wall Street, that's when New York session opens. So that's it pretty much. Now, the Asia session, think about it logically, okay? It's Asian banks that are open. Which pairs do you think it would affect in the Forex pairs? Well, it's logically that will affect Asian pairs. Like what? Any pair, let's say like Japanese yen, Australian dollar, what else do we have? Mostly these, like when you have like the Asian pairs would get affected mostly by an Asia session. That means they're mostly active during this session. Same with London session. Affects mostly European pairs. Like what? Euro, GBP, CHF, CHF, mostly European pairs. Like I don't want to go too much into these, but like Euro, GBP, and so on. Now, in New York session, what does it affect mostly? Well, honestly, it affects everything because it's the most volatile, but affects mostly USD. And for futures traders, it affects Nasdaq, S&P 500, and indices and gold and all of this. Like New York is the most volatile. Most of the action happens in New York. Like that's where it's most active. And London is like medium. Asia is slow. Funny enough, Asia is one of the best sessions. London is very good too. New York is good, but like you gotta know which pairs to trade in New York. You know what I mean? And yeah, that's it pretty much. Now, just quick note: you can trade any session using the no wick strategy, whichever session you want, except the no trading zone. And I'm gonna be explaining what the no trading zone. And this is the beauty of this strategy. You don't need to be tied to one single session to trade. So you don't need to be tied to, let's say, yeah, I need to trade at this time to this time. No, you can trade whichever time you want. Now, I don't want, that doesn't mean you're gonna be sitting on the charts 24 hours. No, most probably I want you to stay on the charts like 1 hour and trade for like 1-2 hours max, and that's it. You know what I mean? So I don't want you to be sitting and waiting the whole day, trading the whole day. That's how you actually kill your edge. Now, what is this no trading zone I'm talking about? Well, once you have the indicator, you see where it says here, no trading zone, right here. This is exactly what you can trade. So this zone right here is the zone you're not allowed to trade. What do I mean by that? I mean anything, any no wick inside the no trading zone, don't take the trade, even if after that, just imagine as if we did this. You know, as if this part didn't exist. So any trade, let's say you see a no wick here, don't take it after the no trading zone. That's not valid. Anything inside the no trading zone, like you can see here, we had a no wick. Let's say it was valid, you wouldn't be taking it. Let's say this no wick, you wouldn't be taking it in the no trading zone. So anything in the no trading zone, we don't take. Now you'd be wondering, okay, Omar, but what about if I was in a trade before the no trading zone? Now we're touching the no trading zone. Well, if that's the case, you would also have to close the trade. You'd be forced to close the trade. If you're in profit, if you're in loss, you would close the trade before the no trading zone. So once we come to the no trading zone, you close the trade regardless, okay? And when are you allowed to trade? Well, after the no trading zone. So let's say here we get a bearish no wick, then you would be able to take it, or bullish, regardless. Like we're not talking about that now, okay? Very easy, very simple. So for the no trading zone, actually, maybe I could write that down somewhere. Let me try to find where I was writing. Yeah, I wrote a lot. I actually wrote a lot today. Okay, you know what? It's all right. So, no trading zone. Usually I prepare it before the video, but it's all right. First thing, first rule, close any trade before we tap it. Second thing, don't take any trade inside of it. And third one, third rule, take trades only after it. All right, that's the 3 simple rules for the no trading zone. I mean, they're not even rules, to be honest. It's just like, they're very easy. So I close any trade before we tap it. Don't take trade inside of it, and take trades only after it. Now, you might be wondering, why is that? Well, the truth is, in that no trading zone, price usually is very slow. Like you can see, like here, for example, you see price doesn't move as much usually. So that's why most of the no wicks inside of it don't work as good. And just bad price action here. And there is something, I don't want to go too much in depth. There is something called spreads hour inside the no trading zone. So that's when like spreads go crazy, but I don't want to go that far. Like, this is all unnecessary. Like, I would love to explain everything in depth, but I don't want to have the video super long. So I want to just give you the value. Like, just so you know, don't trade the no trading zone. Why? We don't care. Don't trade it, all right? Just stay away from the no trading zone. So finally, now we're gonna be talking about the no wick strategy advanced. So if you just skip to this part, again, I'm telling you, you missed out on everything. Because if you just jump to this part, you're not gonna understand anything. Look, especially if you miss the market structure part, you're not gonna be able to understand anything, because the way every single trader reads market structure is different. The way ICT reads it is different than the way, I don't know, SMC, or the way the classic, or I don't know who reads trend, is very different from a person to person, from a trader to a trader. So if you didn't learn the mechanical way that I read trend, you're not gonna be able to understand anything about the strategy. So if you just skipped here, I'm sorry to tell you, you're not gonna be able to become profitable using the strategy. Maybe you will if you can catch it fast, but if not, I'm telling you, you gotta go watch it, because I structured this whole course in a way that you gotta take it step by step by step by step in order to be able to understand everything. Anyway, if you stick until here and you watch actually everything, congratulations, you're a good guy. And if you, because you watch my old videos, you think, okay, cool, I know everything already, you don't. All right? You have to go watch everything. Like, you probably do actually. Why am I lying to you? You probably do. But like, I want you to be 100% sure that you understood everything. You know what I mean? Like, I want you to understand the way I read market structure, the way, do the quizzes, test your knowledge to see if you understood everything or not. Anyway, so what we're gonna do is now, we're gonna talk about all of this, like the main rules, the advanced rules. You probably know all of them by now. And after we finish the rules, I'm gonna show you 2 examples, like quick examples, so you know how the strategy works. And after that, I'm gonna do something that no one online did. I'm 100% sure no one online did this. I'm 100% sure no one online did this, which is I'm gonna be backtesting live, so you can see how this strategy works in front of your eyes, so you can learn from the mistakes people do, so you can learn common mistakes, so you can see how Omar reads the charts before he starts trading, and so I'm not lying about this strategy, and it actually works. What used to happen to me is when I used to go and try to backtest people's strategies, I never used to get good results. Why? Because they never, first of all, either it never works, or they never show it to you. Why are they afraid to show it to you? Because most probably it doesn't work. Or they want to gatekeep that, and they tell you, yo, this is just in my mentorship. That's exactly why I'm going to be live backtesting in front of your eyes. Random bar, by the way. Not last week price action where I know the results. Not me putting it on X2 so I can rig the results. Not me having 2 monitors to show you, yeah, like, you know, to rig it, and then you will see the trade and blah, blah, blah. Like, I'm gonna show you even, like, you know, this is my setup, my whole laptop. It's one screen. So, you know, I'm not gonna be rigging anything. I'm gonna be showing you that as well. So let's get into it, chat. So first thing, trade with a trend only. Bullish trend plus bullish no wick equal buy. Like here, for example, bullish trend, and we got a bullish no wick. So in this case, we would entering buys. If it was a bearish trend plus a bearish no wick, that's when we sell. So basically everything but the opposite way. Stop loss for buys equal higher low, and for sells equal, sorry, I wrote this wrong. For sell equal lower high. So stop loss for buys equals higher low, and for sell equals lower high. Easy. So in this case, we're in a buy. Stop loss would be at the higher low, something like this. Boom. At the higher low, and then take like this. Leave breathing room on stop loss 10% rule. This is very important rule, okay? So always, whatever your stop loss is, let's say it's, in this case, it's 40 pips, right? Always add 10% breathing room. What do I mean by breathing room? So add on the stop loss 10%. So let's say in this case it's 40, it will become 44. If it was 10, it would become 11. If it was 20, it would become 22. If it's 30, it becomes 33, and so on. If it's 5, 6, 7, 8, 9, just add 1, okay? So always add 10%. Now, why is that? Because sometimes price, let's say, goes down and it want to grab liquidity. I'm not going to go in depth into liquidity because we don't care about that. We're not ICT traders. Stops people out and then it pushes. But on the other hand, if you have the breathing room that I'm telling you about, that wouldn't happen. Why? Because it's going to stop them and then it's going to work in our direction. So just to be safe, always, always, always leave 10% breathing room. Sometimes I call it room of space. So 10%, okay? And take profit, always fixed at 1-to-1. And Omar entry only if the stop loss is above 10 pips. So if stop loss is more than 10 pips, you can enter 2 pips earlier. So you don't need to enter the buy or the sell at the no wick itself. You can enter 2 pips before that. Invalid conditions. If price taps the Omar entry, aka if price comes here and taps this area, the Omar entry, and then goes and hits TP, this trade wouldn't be valid anymore. Why? Like if you didn't take the Omar entry, hold on. So if you didn't take the Omar entry, let's say you were like, okay, you know what? I'm not gonna take an Omar entry, I just want to take a normal entry. Or stop loss was less than 10 pips, so you didn't take an Omar entry. And price comes very close to the no wick, and then it goes and hits TP. Very close, I mean 2 pips. In this case, this trade wouldn't be valid anymore. Why? Because technically, the move that we were expecting already happened. The move of price coming and tapping the no wick or coming close to the no wick happened. So the rejection we were expecting already happened. So it wouldn't make sense now when price comes back and taps the no wick, that's going to work out again. That's exactly why it's very important if you didn't take the Omar entry and price comes to the Omar entry and then goes and hits TP, not valid anymore. All right? If you want to keep it simple, just think about it like this. If price comes close to the no wick and then hits TP, the trade is not valid anymore. So what do we do in this case? We basically just don't take the trade. That's it. And we wait for a new opportunity. If price creates new external structure before tapping, it's not valid. So what does this mean? Let's say here's the no wick, price does this, no problem, and then it does this, and then this. So here, it made the structure before tapping the no wick. It wouldn't be valid anymore. Why? Like I wrote it as a rule, but it makes sense, but some people, forget about it. Remember this. Now when we come here and tap the no wick, what would this be right here? This right here would be change of character. So this means here, once we tap the no wick, we're gonna be already gonna be in a downtrend. So this would lead to this first rule being broken, because we wouldn't be in an uptrend anymore. You remember how we said we gotta be in an uptrend with a bullish no wick to take the buys? If that happens and we get this change of character, now we're in a downtrend. Yes, it's still not a confirmed downtrend. That's the first step out of the 3 steps confirmation that we talked about. But still, we don't want to be in a part of this because now we're scared what if price just dumps as well. That's why if we make structure before tapping the no wick, not valid. And I think it's very logical, but some people forget about it. That's why I made it a rule. Trade any session you want except the no trading zone, which is in the indicator. You'll find it there always. Do not trade chop, consolidation, or sideways markets. So if the price is not moving up or down, don't trade that. Avoid trading 15 minutes before and after news, which you gotta do. And price must return. Price must return to the no wick candle within max 10 candles. So after the no wick candle close, price must come back to the and tap the no wick within max 10 candles. All right. What else? I remember there's one rule that I missed, but I can't remember what it is. Oh, it's written, but I didn't read it. I told you guys it's 7:30 a.m. So I'm sleepy. All right. Minimum stop loss. Yeah. So this I think is clear. Like price must come to the no wick within max 10 candles. So if it's 1 candle, no problem. We can take it. 2, it's okay. 3, it's okay. 4, it's okay. Up to 10. After 10, you can't take this anymore. And one more important rule is if stop loss is too small, don't take the trade. So let's say you have a super small stop loss, you don't want to take these. These don't happen often, but let's say your stop loss is like 5 pips, you don't want to take the trade because commission and spreads and all of that's gonna eat most of the profits. So I made a hard rule. Minimum stop loss to take the trade is 5 pips before breathing room. So without the breathing room, it's gotta be 5 pips at least to be able to take the trade. All right. Now let's have a look on some examples. Okay, cool. Amazing. So let's start here. So we have a low, high, still potential higher low, market making structure in between, no problem. And then we had the breakout structure, as you can see, even the indicator is saying it. That's good. Now what do? We do the snake method. We come here. Boom. Snake method. All right, this is the higher low. I mean, it even says it, but it's cool. So this becomes the higher low, and this becomes the higher high. Amazing. What else now? Everything in between, we don't care about until we break the lows or we break the highs. We had another breakout structure, you see? Oops. Now here we had the breakout structure. So this becomes the higher high, and this becomes the higher low. I love when the indicator helps us with this. Cool. Now we got a bullish no wick candle and an uptrend. What do? We place our buy limit on the no wick. We place our stop loss at the higher low with 10% breathing room. So in this case, our stop loss is 7.7. We make it 8.7. And then take profit fixed at 1-to-1. Now before we see, let's see if we, and then we just literally set and forget. So let's wait for price to come back to the no wick candle. Amazing, price came to the no wick candle. So let's see if all the rules are followed. Bullish trend plus bullish no wick equal buy. Bullish trend, bullish no wick, buy. Nice. Stop loss for buys equal higher low. Stop loss for buys equal higher low. Nice. Leave breathing room on stop loss 10% rule. 10% rule. Nice. Minimum stop loss to take the trade is 5 pips before breathing room. So before breathing room, our stop loss was 7.7, which is more than 5 pips. Nice. Omar entry only if the stop loss is above 10 pips. Is it above 10 pips? No, it's not. So no Omar entry for us. Okay, no problem. This one we don't need to think about. If price creates new external structure before tapping, invalid. No, it didn't do that. Nice. Do not trade chop, consolidation, or sideways markets. Yeah, it's obvious uptrend. Good. Avoid trading 15 minutes before and after news. I'm assuming there is no news. And price must return to the no wick candle within max 10 candles. It did within 1 candle. What happened here? Price closed here. I don't know why. This is kind of glitch. Anyway, so all the rules were followed. Now all we do is we just literally set and forget. And that's it. And we would hit TP within 15, 30, 45 minutes. All right. Now, just quick thing I want to cover here, because I know a lot of you guys messed this up. So you know how we said change of character and break of structure, we look at the bodies, not the wicks? That is the case. Just one small note. When you place your stop loss, don't place it based of the bodies, replace it based of the wicks, okay? Because we just want to leave always like some extra room. Like we don't want price to come, let's say here, and then go and hit TP. So for the stop loss, you don't do the bodies, you do the wicks instead, okay? Let's have a look on another example. So we have a low, high, higher low, higher high, potential higher low, higher high now, potential higher low. So, boom. Or, I mean, you could, even if you ignore the structure, it's not an issue. But like, so low, high, higher, low, higher, high. So after here, we got what? Break of structure. After we got the break of structure, what do? As we said, after every single break of structure, there should be new low, higher low, or lower high. In this case, it's a higher low. We do this, snake, and then curve. That's the curve. Nice. So we know this is the higher low. Now here's one of the big mistakes. You know, remember when I was doing it in the quiz and I was tricking you? A lot of people, what they do is, in this case, they would have their stop loss here. But that would be wrong. Why? Do you know why this would be wrong? Think. Actually, I'm going to give you a small hint. Remember, it wouldn't be here. It would be here. Why? Because this right here is still not a confirmed higher low. Why is it not a confirmed higher low? Because we didn't break the highs yet. You see? All of this we covered and we did it in the quiz and everything. So now we're putting into practice. So because we didn't break the highs yet, we didn't get that break of structure, this is still the higher low. So in this case, we have the low, the high, the higher low, and the higher high. As I said, everything in between we don't care about. We're still bullish until we break the lows in this case. So this is a bullish no wick candle in an uptrend. This would be the higher low, not this one. All right? And now what do? We literally just set and forget. Boom. Price tap the no wick. And we hit take profit within like what, 15, 30 minutes, and that's it. All right? Very easy. I know some of you all might be like, okay, Omar, but in this case, we could have got 1 to 2. Yes, but your win rate would have to go down if we do that. Like, you're not going to be able to achieve that, what is it called? 85% win rate if you do that. Definitely you're not going to be able to achieve it if you go to 1 to 2, 1 to 3. Now, after we got the break of structure, this would become the higher low. So if we get, let's say here, a bullish no wick, our stop loss would become here. Because now we have a break structure. Now we do, let's say, the snake. Boom, boom. This would be the higher low. Right? So now we're going to start the back test. What we're going to do here, we're going to go to a random bar, a date, random date, something I've never seen before. And that's how we're going to start the back test, okay? The way it's going to be working is complete anonymous dates. So something, maybe it's going to be in 2020, maybe 2022, 2024. We don't know. And I'm going to be backtesting there. I just don't want it to be like the last 1-2 weeks, because then I would probably remember the results. You know what I mean? So that's how we're going to be doing it. It's going to be no edits, no cuts. I'm not going to speed the video. I'm not going to edit here anything from here until I finish the backtest. Why? Because if I do so, you're going to be like, Omar, you probably skipped the losses or wins. And I don't want to do that, because I want you to actually see the strategy works and how it works and how we can achieve high win rate. Now, first thing is going to be, I've never seen someone online doing this. I'm doing this because I want you guys to believe in this. I really want you to trust the system. I really want you to actually understand it and to see this actually does work. Not like these online gurus. If you go to any online big influencer, I don't want to give names, But if you go to anyone online and you can check, have they ever done a live backtest like this? Or do they usually show you the last week? Because what I've seen, they usually show you, if they backtest, they show you the last week backtest. And that's how they fool people. Or they cut and edit their videos, and then they cut and skip the, the wins or the losses. And then they start cherry picking, like, oh yeah, this worked out, this is a win. Oh no, this didn't work. Yeah, this worked out, this is a win. And they never show you the losses, or maybe they'll show you 1 to 2 losses to show you they actually, did everything right. Me, I'm gonna show you everything in details. No skipping, no cutting, no editing, no making it faster, nothing. I'm gonna keep everything like it is. What else? What else? What else? Look, faking certificates is easy. Faking I made this much and made that much is easy. Faking results is easy. Faking testimonials is easy. A lot of these gurus can just text or call or record a video with one of their friends and say, yeah, I made $1 million, blah, blah, blah. All of this is possible. But faking live backtest results, that's something no one can do. That's exactly why. And if I wasn't confident enough that we're gonna see that we're gonna get amazing results, I wouldn't be talking all of this talk. I just want you to really lock in, because now you're gonna learn the most common mistakes. You see how Omar Wick, if I bring my brain to the chart, how I would be trading and how I would be taking the trades. And this way you can see exactly the way what I do on every single day, on day-to-day basis. All right, let's get it. Let's stop yapping. It's gonna be the charts in front of me, and this is just my recording setup. This is my charts. This is, the rules, in case I want to show you something about the rules. And this is Forex Factory. This is gonna be so we can check. Let's say we see a huge, crazy move, so we can check if it was news or not. And that's literally it. And as you can see, this is my laptop. Nothing, no double screens or any of that. Because also there is some people who, I don't want to give any names out there, but they have double screens. So what they do is, because you can't see their laptop, they would have another screen behind. That way they can see the results before it happened. And then they would know what if it's gonna be a win or a loss. And if it's a loss, they would just give an excuse. That's why I'm not gonna do any of that. I'm gonna show you everything in front of your eyes. So we're gonna go to replay, random bar. So what this means, this is just a random date, you see? Now we went back to March 2025. Another random bar. You see, now we went to 2021. Random bar. Now we went to 2024, and so on, all right? So just so you be like, okay, Omar, you know the date. The next random bar we can backtest, unless, of course, if it's in 1999, I don't want to do it. Okay, April 2025. Let's get it. Let's start from the next day, so we start it fresh. Top. Perfect. Let me just fix one thing quickly. Win rate dashboard. Let's have it at 0. So we can keep track of the wins and the losses we're getting. And now, let me just take off my watch. So I know this is lock time. Lock in time. Lock in. I'm not gonna be explaining too much in details because I already did. So I'm not gonna be explaining each trade so much, but I'm still gonna, explain briefly, right? Amazing. So, it's already showed. My bad, guys. So as you can see, we have a low, high, higher low, higher high, higher low, higher high. Everything in between, as I said, we don't care about, right? Boom, boom. Everything in between, we're still in an uptrend until we break the lows. After we broke the highs here, this became the high. And this right here became the break of structure. Like this. Where's template? Bullish break of structure. So now where's the most recent higher low? It would be this one, the bullish no wick. Once price taps, that's when we enter the buy. Boom. Stop loss at the higher low, 17.4. It becomes 18.4-ish. And then take profit 1-to-1. So that would be our first trade, our first win. And boom. That's unfortunate that it played very fast. Okay. Oh, that's a nice setup right there. That one too. All right. Let's place the buys. Yeah, actually, one more rule. I just forgot to mention. Any trade that we close, if it's, let's say we're forced to close it due to no trading zone, or we're forced to close it because of news or any of that, any win below 0.5%, we're not gonna count. Any loss below 0.5%, we're not gonna count. Okay. So this would be our first trade, and we can have this trade as well here. Boom. So stop loss is 57.5 pips. With an Omar entry, we entered 2 pips earlier. So 59.5, and then 1-to-1. Like that. And this one as well, 1-to-1. If we get it. You know what? I don't think it's a big difference. Just so we can see it clear. If it goes down, we can enter it after, okay? And now we just literally set and forget. Okay, this trade would have taken forever. And who's the GOAT, guys? Who's the GOAT? Okay, we didn't tap this at all. Oh, you had another one here. Boom. So this was the higher low. This was the higher high. So higher high. Higher low. This one would be stop loss here. 18.5, 19.5. It would be like 20 pips. And 1-to-1. This trade would have taken a while. I would have been pissed in this trade. So, boom. That's 2 wins. 3 wins in a row on a random date. As you can see, that's how great the strategy is. Now, realistically speaking, I wouldn't be taking any more trades that day. After hitting 3 TPs, I would be done for the day, you know? Like, I would be just done. We didn't get any no Wick, so that's good. Okay. So let's see. This one wouldn't be valid because now, boom, higher low, boom, boom, boom. Had a change of character. And then we had another, we had the bullish. Let me see. I mean, either ways, even if you want to take it, it would be a C setup. So I'm just going to stick to the A setups. It would have worked out, funny enough. That's crazy. It would have worked out, but it was against the trend after this change of character. That's why we're not going to count it as a win. Okay, nice. Nice. So let's see. I think maybe this is less than 5. Oh, no, it's not. Okay. 13.1, 14.1, 1-to-1 take profit. Boom. So I have a low, high, higher low, higher high. Bullish no Wick. We enter the buy, stop loss at the higher low, and take profit fixed at 1-to-1. And then you just literally set and forget. And that will be a stop loss right there. No problem. Price came very close to the take profit. It is what it is. 13.8, 14.8. Yeah, it's definitely a stop loss. Okay, no problem. We move on. Boom. Beautiful setup. If we come back and tap it. 36.6, 38.5. Nice. Okay. We didn't tap it, unfortunately. Cool. So that will be 1 loss for the day. It is what it is. Okay, that's a nice trade there. Okay, nice. Boom. Stop loss at the lower high. Take profit 1-to-1. Beautiful. This one's just simple, you know, like it's obvious. High, low, lower high, lower low. So no need to overthink it. Just does it come back within 10 candles. 1, 2, 3, 4, 5, 6, 7, 8 candles. We're chilling on that one. Cool. I gotta know how many trades should I take actually, because I'm low-key getting tired. It's 8 a.m. already. Just want to be done with this course. Okay, this one is a nice trade. Only problem with this trade is most probably it's not gonna have time to hit, you know? Like 41 pips, and like you see how close it is to the no trading zone. So these ones I don't like taking, you see, because we're gonna be forced to close the trade. And either ways, like this would be, if you took it, you would have like a 0.2, I think, 0.3, like 0.2, 0.3 pips stop loss, because you would be forced to close it. But that's why I don't like taking these trades, because I don't like to be forced to close the trade. You know what I mean? I don't like that. But that's nice, at least we didn't take it. All right, this one is against the trend. This one is a C setup. All right, this one would have been nice. Oh, beautiful, 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 beautiful. I was talking about this one. All right, so, but we got this one, I guess. Oh, maybe we got the one above as well. Oh, no, we didn't. Even the Omar Entry didn't have saved us here. So 21 pips, 18 pips will become 19.1 pip, and then take profit 1-to-1. Easy. Light work. So that's 5 wins, 1 losses so far. All right, nice. This one I'm not very confident in, for one reason, is stop loss would have to be extremely tight. Oh no, actually no, never mind. It is 10 pips. I thought the structure here was small. Okay. I don't like these trades though. I don't like these for 8.7, 9.7. Then 1-to-1. And that will be a loss right there. So we have 5-2. No trading zone. This one, technically, it is valid. I just don't like the fact that we're gonna be in a huge, like, this imbalance. So I'm just gonna skip this due to this imbalance right here. Huge imbalance. Like, the market, you know, is not very structured. It would have worked out, but still, I don't want to be part of that. Okay. Same one. I don't like the fact that we didn't close above. Because now, like, let's read the trend together. So it would be low, high, higher low, higher high, right? So this is the higher low, and this is the higher high. Now, anything in between, we're still bullish until we break the lows or the highs. So if you want to take this trade, is it valid? On theory, yes. But you can't have your stop loss here. Why? Because we didn't close above the highs. So technically, you should have your stop loss all the way down. Now, why don't I like these trades? Because look, I'm going to just show you why I don't like them. Because they take super long to hit TP or stop loss. And I don't want to be part of all of this, you know, all of this consolidation, all of this noise. And most of the time, you're going to be forced to close at break even. That's why these trades, I don't like to be in. You would have closed it in profit, funny enough. 0.2%. I'm not going to count that as a win. It's a very small win. But you see why this is the exact reason why I don't like to be part of these big, huge stop losses. So when I see these huge stop losses, I just avoid the trades always. And I'll start looking at another pair, because don't forget, now we're backtesting on one pair, but we have a list of pairs which we're going to be talking about for Forex and for futures. So that's why, like, I would be not looking at one pair. So instead of having a super huge stop loss, I would try to find the trade that has a way smaller stop loss. Okay, cool. So all of this right now is just consolidation. All of this, we're not going to be trading. So you see how the market is moving, like no clean trend. We don't want to be part of that. We want just clean trends, like the wins and the losses we quote. All right, beautiful setup. You see this? You see the difference? This is the part where most people struggle. See this? This is not a clean structure. Look at this though. This is a good structure. Now, if this hits stop loss, I'm not even sad, you know. It's a clean trade, very good trade, 20.4, 21.4. Then we enter 22.4. Omar Entry, 23.4, 24.4. Oh, 28 actually. Oh, yeah, I was looking at this one. My bad. 28, 29, 30, 31, 32. Nice. 1-to-1. I mean, this is debatable though. Let me think. Let me do that snake. Tum, tum, tum. Yeah, no, never mind. This would be my intraday strategy. Because I don't know if I told you this earlier in this video, but I have two strategies, intraday and I have scalping. So intraday, I don't want to talk about the intraday, but the scalping is the one like that everything we've been covering through this video. So this would be the higher low in this case. See, sometimes the indicator gets it wrong. It said here, then mark this one. If you drop to the 5 minutes, it's probably gonna say, yeah, if you drop to the 5 minutes, the indicator got it right. So this is a small trick I'm gonna give you. Actually, I didn't talk about this in the video. So if you're not sure if it's a higher low or not, what you can do is mark it out like this, draw a circle on it, drop to the 5 minutes, and then you look. If the indicator says it's a higher low, that means it is. If it doesn't, that means it's not. So in this case, it does say, so that's how we can confirm that it's a higher low. And then 1-to-1, okay, cool, we're in. And boom. So that would be our 6 win, 2 losses. Okay, we had a change of character, we had a downtrend. Did we close below? Oh no, we didn't close below. So this is still not a confirmed lower high. Oh, it would have worked out. Funny enough. It would have been like this. Yeah, but it's not valid. I'm just checking if it worked out or not, but it's not valid. Why is it not valid? Because we had the first step. So actually, I don't want to confuse you because that's a bit advanced. You could have done this, but that's a very advanced concept, so I don't want to explain it now. So based off what we have talked about until now, this wouldn't be a valid trade, okay? Or because we didn't do the 3 steps confirmation yet. Because we just wicked below it, we didn't break below it. That is what it is, it's okay. I don't want to be biased, you know, and count it a win after I said it's not valid. So, because if I do that, you guys are gonna be like, hey Omar, but man, it's blah blah blah. You said this is a win, but this is this is not valid. But then because it worked out, you count it as a win. We're not gonna count it. It's okay. Holy gap. Okay, so now because of this gap, there is something I would like to do. Because this gap doesn't happen often, but when it happens, price usually is not very good. Okay, nice. So when this gap happens, usually I try to avoid trading until, you know, we go far from it. That's why I didn't take this buy, although it worked out. But we're not gonna count it as a win. Because I'm showing you now how Omar Wick would trade. All right. Low, high, higher, low, higher, high. We had change of character here. So this was against the trend technically. It worked out still. Funny enough, they're working even when they're against the trend. This shows you the power of the no wick. I'm just not taking them because I want to keep the highest win rate. Oh, funny enough, if I took every no wick, we would have got a crazy win rate, but I don't want to be biased, all right? Two, all right. Now where's our stop loss? I'm just scared this is news. Okay, we can double check it now. Higher, 12.4, 13.4, and 1-to-1. I think there is a high chance this is news. We'll see though. We gotta check if this is news or not. Okay, nice. We close below as well. So the way I read, just even if it's news or not, I'm just gonna explain to you first. So the way I read the trend is high, low. As I said, everything in between we don't care about until we break the lows or the highs. So boom, we don't care about any of that. And once we broke the lows here, now we confirm the downtrend, right? This becomes the recent lower high. This is the most recent lower low. Everything in between we don't care about. And then we got this bearish no wick. We take the sell. Why is the stop loss not here? Because this is still not a confirmed lower high. If, let's say, this candle right here closed below, then this would be a confirmed lower high. So that's why this is the lower high. And now after this here, the breakout structure here. Boom. Bearish breakout structure. This becomes the low. And right here becomes the high. Now this becomes the high, okay? Sorry, not this. This. Because we do the snake and then boom. Like exactly like here, how we do the snake. Snake. Oh, first curve. Boom. I just want to check if this is news or not. Because I feel like it might be a news candle. Or actually, if it's not news, if it's news, I'm not gonna count it as win. Most probably it is news, yeah. Okay, 13 May 2025. May 2025, 13. That is news. Okay, nice. Or 3:30. Yeah, it is news. Okay, no problem. We're not gonna count it as a win. So it would have been a good trade, but no trading zone, so. Oh, a bearish no wick would have been nice. That's clean trend. Now here's the thing though. You see, like this day, you might be like, okay, Omar, but we didn't get any trade this day. What would have happened, you would go to another pair, for example. You see, you would have got a trade here, trade here. You would go to another pair. You see, you would have had, let's say, a trade here. No, this wasn't valid, but let's say you would have had a trade here. You see what I mean? So that's why, like, if you're thinking, okay, Omar, but why we're not catching any trades? Well, because we're looking at only at one pair. But when because we have a lot of pairs, you would always be catching trades. You see what I mean? For this day, you see how many opportunities you would have had? A lot, right? Just like so I clarify this to you from now, like, so you don't think, okay, we don't take as many trades as we would wish. Okay, nice. Never mind. It's more than 2 pips. Okay, cool, perfect setup. Boom, stop loss at the lower high, 17.5, 18.5. Take profit 1-to-1. Let's see what's gonna happen. Of course we know what's gonna happen. That's 7-2. Love this. I love how we didn't break any highs. That's why this failed. Funny enough, I know some people who trade this internal structure. I'm not gonna name them. Oh shoot, I missed this. Sell, boom, and 1 to 1. Was this not a news candle though? 15 May. No, I don't think it's a news candle. No. Beautiful. That's just a normal loss then. So we have 70% win rate so far. High, low, high. High, low, lower, high, lower, low. Consolidation. Okay, we didn't do the 3 steps yet. Okay, nice. It is valid, but like I haven't explained this concept here. I only explain it to my mentorship students. That's why I'm not gonna talk about it. But so from what we've talked about until now, after the change of character, you remember, this would be a C setup basically. That's why like I'm not gonna go too much in depth into this. But we had just a change of character, so that's the first step. And then we didn't get the second step and third step. You know what I mean? That's why this we wouldn't take so far. It would be a C setup though. This one would be nice. Like this concept I do explain, but I haven't explained it here. That's why I don't want to talk about it too much. Like this is a valid trade. Just I haven't explained it in this video yet. Like it would be something like this. Higher low, 11, 12.1, then 1 to 1. Ooh, that would have been a nice setup. But I haven't explained this here. That's the only problem. It's like, you know, when I said that, I can explain it briefly actually. You know how when I said the 3 steps is like this, and then this is, you need a change of character, then boom, and then create a break of structure. There is only one exception where you don't need to do that, is if when we go and do the change of character, if we made structure before that already, then it's cool. That gives it like a pass, you know what I mean? Like this is basically the same concept as the 3 steps, but here in this case, the 3 steps happen basically before that, because yes, we didn't have a change of character, but we made the structure and then change of character. That's why it would be allowed to take this trade, you know what I mean? Like that's me explaining it briefly. Now, of course, there is more rules into this. I just don't want to go back to explaining because I want to finish this back test and go to sleep. Oof, this would have been a very nice trade. Oh no, actually no. When it's still in an uptrend, and this would be just internal structure. What did I do? What did I do to deserve you? Don't even know what I did. No, I don't have water with me. Oh, that's not good. Ooh, this would be a C setup because you have a high, low, lower high, lower low, lower high, lower low, change of character. But you see, here, this is when we need the 3 steps because we just did change of character, but we didn't have a structure before. Like we didn't, before the change of character, we didn't do this, for example. So this would be a C setup. Like I think still believe it's gonna work out because it has 70% win rate. Yeah, you see, it would have worked out, but it wouldn't be as good of a trade. This one, stop loss would be too small, I believe. Oh no, never mind. They close below? Okay, no, it didn't close below, but stop loss would have been like 0.2 pips maybe. I don't know. We'll measure it. We had a low, higher low, higher high, higher low, higher potential. Then higher low, higher high. Oops. Like this. Boom, snake. Boom, boom. You see, this is the most recent higher low. So if you want to take the buy, your stop loss would have to be how many pips? Let's see. It would have to be 1.5 pips. And then we go back to the rules. minimum stop loss to take the trade is 5 pips before breathing room. So in this case, it's 1.5 pips. It's not valid. High, low. High, low, lower, high, lower, low, lower, high, lower, low. Okay, nice. This was invalid then. Because we have high, low, lower, high, lower, low, lower, high, lower, low. And either way, this is news 100%, but high, low, lower, high. Like I just want to, this is like for teaching now purposes. We have the high, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. And then we have the change of character here because this candle closed above this candle. And then we had this, so this wouldn't be valid, especially that we didn't close below here. So it would be even, not even a C setup. And if you took it, it wouldn't be valid either ways, but this probably is news, but like regard that, it wouldn't be valid either ways. So now we're in the neutral phase. Now we need a bullish no wick, or never mind. We're still in the neutral phase. All right, cool. Now we need a bearish no wick to be able to enter a sell. Just give me a bearish no wick. Okay, nice. Oh, nice. Finally, a good trade. So we have a low, high, higher, low, higher, high after we got a change of character. This is a clean setup. This is a very good setup, actually. Yes, it's more than 5. 7.2, 8.2, and then 1 to 1. Boom. Oof. 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 That's 9 wins, 3 losses. That's another trade right there. This is called the power of set and forget. Okay, never mind. This one wouldn't be valid because stop loss would have to be less than 5 pips. Actually, no. Funny enough, this wouldn't be valid, the second one, because here we had a change of character. Funny enough, this wouldn't be valid. That one wouldn't be valid because here we had a change of character. Now, you might be wondering, Omar, what do we do in this case when we have like a change of character, but we're in a trade, do we close that break even? No, you don't. You just set and forget. I'm going to explain to you actually the set and forget. And I know you might be wondering, okay, Omar, what do we do in case we get a no wick against us and all of these? These also we're going to cover after we finish the backtest, okay? Did we count this win? I don't know if we did. Okay, 35. Most probably this one's not going to hit. Doesn't have time enough to hit. And price also pushed so much up, so it still has to go down and then push up, but I don't think it has enough time to do that. Plus, we have an imbalance here. I don't think it has time. That's exactly why I would never do this to myself. Let's see it though. 33.34, so 35, 36, 37 pips. This is called the power of the breathing room. 37 pips. Let's go back. Where is it? Leave breathing room on stop loss 10% rule. Always leave breathing room. And this is exactly like why I wouldn't take these trades. You see, when stop loss is too big and when you have imbalanced price and when we didn't make enough structure, that's how you know you shouldn't be taking the trade. Otherwise, you're going to be stuck and you're going to be forced to close the trade. And that's what I hate doing. I hate being forced to close the trade because like what if now price just goes up? You know, I don't want to be part of these ones. Funny enough, if you did take it, you would have had the chance to go out on break even. Because like 1 hour, 2 hours, 3 hours, like no, not 3 hours is too much. Like usually 1 to 2 hours before no trading zone. Just stop, avoid trading because you don't want to be forced to close the trade. And that's a good setup. Lower high. 6.3, nice, that's more than 5. 7.3 with a breathing room, 1 to 1. Now these small trades, listen, on backtesting they look nice, right? In real life they're stressful as hell. Like they're hella stressful. Like don't see it now, okay, nice, we would have hit take profit within 15 minutes. Don't look at it like this. Because yes, now it looks nice, but in real life, oh my god, they're stressful as hell. But this one actually would have been nice because it was 0 drawdown. So this one wouldn't be as stressful because once you enter, it's basically you directly went to TP. Let me just make it more accurate. Boom. 6.7, 6.7, 7.7 and 1 to 1. That's what my TP would be. Boom. Tum, 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 tum. Tum, 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 tum. Feels so slow backtesting one pair. This one would have been nice if we got. Yes, the trend. Okay, nice trade finally. Did we break the lows though? We didn't break the lows. We broke it afterwards. Yeah, stop loss would have to be massive on this one. Oh, it's actually not that bad. 19, 17.5, 18.5. It's not that bad. Okay, it's not terrible. I'm thinking about this trade. I might want to go out to break even, not gonna lie. What is this? 14/15, 23rd of May. If this is not news, man. If this is not news. So wait, 23rd May 2025. Okay, 23rd May 2025. It's not news. Okay, that's crazy. It happened at 14/15. 23rd May 14/15. 23rd May. Nothing. No news at all. That's crazy. I guess. Okay, this has to be something though, because that's a crazy push. I was just talking about I want to go out at break even and stuff. That's crazy, crazy trade. That's actually crazy. Like, whoa. Okay. Hey, listen, guys. I know the Wick does a big impact, but not like that. You know what I'm saying? So just keep your hopes tight. Okay, yeah, definitely there's something going on. What are these pushes? Yeah, definitely something was going on that day. 100%. Because this is not normal price action. You know what I mean? These are the days after I see such movements, I'll be like, okay, I don't want to trade anymore for the day. How long have we been recording? Backtesting? 39, 40 minutes. Okay, cool. Let's see, maybe we'll finish it at the 1 hour. Yeah, this is a nice trade. Only thing I don't like about it, like, okay, now we're backtesting, so we could take it. But in real life, I wouldn't take this just because of how big stop loss would be. Because in this case, the trade would take really long time because we have a low, high, higher low, higher high, higher low, higher high. Then everything in between just doesn't count, right? So all of this we don't care about. So until we break the highs, this is the higher low. That's why I wouldn't like to take this trade. Like stop loss would have to be huge. Okay, maybe not this huge. It would be here. So snake, whoop, would be here. But still, I don't like these huge stop losses. So, or it's like, you might be like, okay, Omar, but you took, let's say here, 20 pips. Why are you saying this is a huge? Here, at least the day was pushing, was moving. Here, the price is not moving that much. That's why I'm like, okay, I don't want to be part of slow volume plus a big stop loss. That's like my biggest nightmare. So 23 pips with the Omar entry will become 25. So 2 pips earlier and then 1 to 1. Now we're backtesting, so that's why like I'm taking it, but I'm telling you, like in real life, no chance I would take this. Or not no chance. In my intraday strategy, which are like the strategy where I take trades and I stay in the trade like 6 hours, sometimes 7 hours, I would definitely take it. But like with a scalping, if you're a scalper, no. Now, funny enough, this would have hit within 1, 2, 3, 4, 5, 6, 7 candles. So that's what? 7 times 15. That would be like for like 1 hour and 45 minutes. So a bit less than 2 hours, which is not terrible to be honest. But like, yeah, still, I don't want to be part of that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay. Oh, it's not. Didn't have the Omar entry. And now it's too late. It's more than 10. Okay, nice. Yeah, unfortunately, I had to cut this video because my friend called me and on WhatsApp, and my WhatsApp is connected directly to my laptop as well. I have the application on my laptop. So for some reason, I have my laptop on Do Not Disturb. I have my MacBook on Do Not Disturb. But whenever I get a call, I get like a notification, you know? So I get it like, it first does like a one-time call and then it hangs up. Although it's on Do Not Disturb. Anyway, so what happened is when he called me, his number, like I don't have his number saved. Like I didn't name his number. You know what I mean? Like I don't have it. I have his number, not as a saved as contact. So his number appeared, and while I'm recording, so of course I'm not gonna leak his number to the public on YouTube. That's why I have to cut this. So I made like this video now is like here. I had to cut it. You know what I mean? Because I had to stop, take the call, and then cut it. So unfortunately, I could keep going on with the backtest, but if I do so, I know most of you are gonna be like, yeah, Omar, but now how do we make sure that you didn't see the results and what happened after? And I know you guys, like I promised before this that this is gonna be no cuts, no edits. So that's why we're gonna stop here. But we had a good, decent amount, you know. We had 12 wins, 3 losses, 80% win rate. That's not terrible, you know. If we kept going, we'll probably get the 85. 90 would be difficult, you know. On a small sample, 90 is easy. But once you cross 1,000, 2,000, 3,000 trades, 90% is a bit difficult, you know what I mean? Like, do I get, let's say, some months 90%? Yes. But like over a big sample, it would be difficult. Like if you backtest the strategy 2,000, 3,000 times, trades, sorry, 90 would be very difficult. So I'm happy with the result. 12 wins, 3 losses, 80% win rate. No cuts, no edits, no making the video faster, everything in front of you. So I hope you actually understood what we were talking about. And I could let it keep going, but because of the edit, I don't want to do it. So just so you guys don't say, okay, Omar, you had the edit, so now you know what's gonna happen. Like, you know, you might be like, okay, I went to the future, like future and trading view, and then saw the results and came back. So that's why I'm not gonna do that. Either ways, I believe this backtesting was like 40, 45 minutes. So it's a pretty decent, you know, pretty decent sample. I took actually a break as well after that because I was so mad. So I was like, okay, let me know, take it chill, grab my coffee, talk with my friend a bit, and you know, now I'm reset. So let's keep going with the video. And actually, before we continue with the video, there's one thing I want to talk about. As I said earlier, listen guys, listen please carefully, okay? Faking results is online, people can do it. You know, even MetaTrader results, you know, like someone can buy a server easily, it costs like $20,000. It's not cheap, but like buying a server on MT5 and, you know, faking results, having deals with a broker to fake, you know, wins and all of this is really possible. So please, please, please don't be fooled online, all right? Whenever you're gonna join someone, make sure that you actually try their strategy, make sure that you actually understand what they're doing, make sure that they show you live backtests like this, you know, in front of your eyes, going back in time. Not like, you know, like, because let's say now I know, okay, this trade's gonna hit take profit. It's very easy that I come here, I'm like, okay, guys, I'm gonna show you how the trade that I took today and then do this. You know what I mean? So this is very easy to do. But what people can do is go in random dates, random backtest, and actually showing you the results. That's what's gonna be difficult to do. You know what I mean? So if you want to make sure that a strategy works, make sure whichever mentor you're choosing, that they show you what they've done, that they show you the backtest, that they show you the results of their students, of themselves. But the most important one is they show you going back in time, random bar, focus on the word random bar, and then doing this. Not telling you, yeah, I want to backtest the last month. Of course, like obviously, I would do that as well, like showing the last week or showing the last month, just to show you guys what you could have made. But if you, to prove the strategy, they gotta go back in time. Like, cause if I just go right now, like let's say I know the result, I don't know. Let me just go back like in time properly. So let's say I come here, right? And now I see this works, this worked out. If I just go back here and be like, oh yeah, here we can break the 10 candles rule because of this, that's easy to bullshit, you know what I mean? So please don't be fooled online. All right, this is just a warning I'm giving you, so you guys be aware of it. Or like this one, for example, I can't, if I know this is gonna hit TP and I go back and start showing you from here, that's gonna be called cherry picking. Like, you know, I would just take a screenshot of this one, then I would look back, okay, this one worked out, take a screenshot of this one. Okay, let's see, this one right here failed, then I wouldn't show it. And then, you know what I mean? This one worked, so I would take a screenshot of it and show it. Don't let them explain to you the strategy like this. Let them go and back this in front of you. Like now I'm, you know, like now I'm cherry picking. Like, okay, this one, this is called cherry picking. Please don't be fooled with the cherry picking like this. Then if they do that, that's the biggest red flag. So please, please, please be careful. I'm not against you investing in yourself into getting a mentor. I'm a mentor myself. I teach hundreds of students. But I'm just telling you, regardless if it's me or if you're gonna have another mentor, please, please, please don't get fooled. All right, that's all. That's the only advice I would like to give you. So now let's talk about the best pairs and assets to trade on in forex and in futures. So let's start with forex. In forex, you have many pairs. I traded mostly on forex pairs. You can trade it on gold as well, but gold recently haven't been printing no candles. That's why I haven't been trading gold at all. But it works as well on gold, on forex pairs. Mostly I traded on forex pairs, or not mostly. I only traded on forex pairs. So these are the best 5 forex pairs. First one is CAD JPY. It has the highest win rate. Second one is USD CHF. Third one is USD JPY. Fourth one is AUD JPY, and fifth one is AUD USD. Fourth and fifth, to be honest, they have the same win rate. These two have the same win rate. And when you gotta trade this, best time frame to trade it on is the 15 minutes. Now, at the moment, I don't recommend you to go lower, because if you want to go lower, it has different rules, which I don't recommend you to do at the moment. With what all the knowledge that you got from this video, stick to the 15 minutes. You could go higher, no problem, but don't go lower, okay? Me personally, as Omar, because, you know, Trump usually gives these random tweets in New York, right? And these random tweets in New York, they affect mostly any pair that has USD. So let's say AUD JPY wouldn't be affected in New York, right? And when Trump tweets, the market just goes crazy like this or like this. So that's why I don't trade. I try to avoid USD pairs during New York. So anything that has USD, like USD CHF, USD JPY, these pairs I try to avoid during New York. Now, I'm gonna be honest with you, this strategy works on literally any pair you want. Of course, unless I don't want to see you trading, I don't know, USD Swedish crowns, or you know what I mean? Like, I don't want you to see trading random pairs, like, or Indian rupees USD, for example. I don't want to see you trading these pairs. Like, keep it realistic, good pairs, the famous pairs. Me personally, I have a big list, but these are the best 5 ones. I can show you my list actually, in case someone want to have them on the list. This is my list. As you can see, I divide them currency pairs with USD, and then currency pairs without USD. By the way, these are not ranked like in which one is better than which one. So usually what I do is once New York session hits, it's just top trading these pairs most of the time. It's not like a hard rule, but like you don't have to follow this rule. But like personally, that's what I've been doing, just because I don't want to be caught in any Trump tweets or any flash news, Trump saying something, and then the news just blow my stop loss. So that's why I've been avoiding USD pairs specifically during New York. But can you still trade it? Yes. Is it the best? No. Would you, ruin your whole process if you do it? Trade New York, these pairs? Probably not. But just know you will hit a couple of stop loss here and there because Trump had a tweet. And then these are the currency pairs I trade without USD. So, and the list can just keep going, honestly. Like now, I've been limiting myself to these ones. But if you want the absolute best pairs, these are the best 5. It's up to you to choose the best 3. For example, the first 3. Some of my students, for example, choose only the first 3. Me, who else we have? I have, for example, Ahmed. He trades all of these 5. We got Adoria trades, for example, all of these and even more pairs. Eric sticks to the best pairs. You got Zach sticking to the best pairs, or no, Zach does all of these actually. So it depends, like from student to student. I'm gonna keep this optional. It's up to you. You wanna stick to these, you can stick to them. You wanna have more, it's up to you. As long as you don't overtrade, okay? Try every time you get 2 wins, stop trading for the day. If you get 2 losses, stop trading for the day. If you get 1 win, 1 loss, then you can take a 3rd trade. And that's it. Don't take more trades. Otherwise, you're going to start overtrading. Sometimes, the market just is not good. So after 2 losses, instead of keep running the streak, you don't want to do that, right? That's why if you get 2 losses, just cut it off. You know what I mean? Yeah, that's it pretty much for the Forex pairs. It's pretty easy, pretty straightforward. Me personally, as Omar, I trade only Forex. Now we're gonna talk about futures. So I got also a couple of students who trade futures. And even actually, fun enough, I discovered this from IG. People be like, yo, Omar, I got funded. Yo, Omar, I got payout. People will just watch like you guys who watch my free content and then they got a payout. They did it on futures. So there's 2 ways you can do it. Most people don't know about this. You can do something called currency pairs on futures. Like what? How? So the way you do it is, let's say GBP USD. Actually, yeah, I need to add one more thing here before I start here. So for the Forex pairs, when you analyze the charts, it's always important that you only analyze on Owanda. So what do I mean by that? You go here. Let's say you want to do, I don't know, let's say USD CAD, for example. When you're going to add it, you add this one on Owanda. All right? It's very important that you analyze on this Owanda. So this is the charts that we all use. So, because why am I saying this? Let's say if you choose FXEM, a candle might not be a no-wick candle. On Owanda, it might be a no-wick candle. Sometimes the opposite. So just so not everyone is trading in a different way, we all analyze on Owanda, okay? And don't over confuse it. Like, don't start looking at different brokers. No, just stick to Owanda. Just look at Owanda, and that's it. Now, there is something that actually sometimes pisses me off, guys. You be like, okay, but Omar, because the thing is, I explained it in the course, but for some reason, you guys still ask me. But Omar, I don't trade on Owanda. Do I need to be in Owanda to be able to trade? No, you don't need to be in Owanda to trade. I'm just saying, on TradingView, analyze on Owanda. Okay, but Omar, on Owanda, there is a no wick, but on my broker, there is a wick. Is it still valid? Yes, it is still valid. Just go on TradingView. If it's a no wick, put everything on TradingView and then just execute on your broker. That's it. Please, if someone asks me about this question, I'm not going to answer it. All right? Always, always, always analyze on Owanda. Always, guys. Okay? Always. Just analyze on Owanda, execute whatever you want. What about my MT5? It shows a no wick, or my MT5 doesn't show a no wick. I don't care about your MT5. I just care about how it looks on the charts on Owanda. That's it. That's literally all I care about. Okay? And yeah, that's it pretty much. So that's it for Forex. For futures, you can trade currency pairs, but on futures as well. Most people don't know this. By the way, you could do it like, let's say you do, like, it's going to be called different, by the way, than what we're going to just show you. Even on prop firms, you can do it. So let's say you want to do GBP USD. You go on futures. You see, you have GBP USD futures. And sometimes it looks the same, sometimes it doesn't, as the Forex charts. So what you could do is, you could analyze same thing as us on Owanda, but execute on your broker or on your prop firm on futures. Basically, the same thing, but it's gonna be a different name. I don't know it's the name for you because it's different from a broker to a broker, from a prop firm to a prop firm. That's why I'm not gonna be able to give you an answer because, and it's of course it's different like every month when they change it and everything. So that's why I'm not gonna be able to help you with this one. I know my student Ahmed, he does this. He trades, let's say, GBP USD on, and I've seen him trading AUD USD as well on futures. Now there is some confusing one like USD JPY, it would be flipped and stuff, but like there is a couple of good pairs. Make your own research. Check with your broker. How can you trade currency pairs? Like if you do it in prop firm, just text customer support or something. I want to trade GBP USD, for example, on my futures account. What's the name of it? And then they're gonna be able to help you. All right. And same concept. You trade it on the 15 minutes. Now you also can trade it on Nasdaq and S&P 500, but only difference is when you're gonna do that, do it on the 5 minutes time frame. So this 5 minute time frame is only for Nasdaq and S&P 500. I don't want to see you guys trading the forex pairs on the 5 minutes. Okay. So for the S&P 500 and Nasdaq, you can trade it on the 5 minutes. Personally, I don't do that. Personally, I don't trade futures at all. I'm a 100% forex trader. I'm gonna keep it honest. I don't want to, lie to you. I'm a 100% forex trader, but I've got a lot of people who already passed their funders and got payouts on futures. So if you ask me which one do you prefer, obviously I prefer forex, just because I've been doing it for many years now and I'm used to it. That's why I'm still not ready to take the decision and move to futures. If I ever do that, I will let you guys know. But until now, I'm still happy with my forex. Making my own money from forex, so why fix something that's not broken, right? And here it's up to you actually. After watching all of this video, it's up to you. If you would like to do forex, that's what I prefer. If you're still insisting on doing futures, I know their prop firms are cheaper and stuff, and you want to do Nasdaq and S&P 500, then you got to do it on the 5 minutes. And as I said about the currency pairs, obviously I prefer the currency pairs because that's what I've backtested most. Like for Nasdaq and S&P 500, it wasn't backtested, let's say for the currency pairs, they were backtested for like 20 years. Nasdaq and S&P 500, I haven't even personally backtested them. So I'm depending on my students' backtest and what results they got. So that's why I'm telling you, if you want to do this, I prefer on Forex. All right. So that should be it for this. Now, last thing is set and forget. As you guys know, this strategy is 100% or 80% of the time set and forget. The only exceptions where you don't set and forget is if we have news. So it is set and forget, but once you see, okay, news in, let's say you take a trade, there's news in 2-3 hours. Before the news, you got to go and close the trade manually. So that would be the only time where it's not set and forget. And then obviously the no trading zone. Once we hit the no trading zone, you have to close the trade. So it is set and forget, except you got to close the trade before the no trading zone and news. And other than that, like these are the stuff that takes you literally 1 minute to know before you take the trade. And this rarely happens. I don't like to talk about it, just like, because it happens so rare. I don't, I was debating if I should include it or not in this course. But then I was like, you know what, Omar, it's just fair to tell people how you trade. That's why I want to include it. So this happens really rare. If you get an A setup trade, so let's say you're in a clear uptrend, right? And let's say you get a bullish no wick here. This happens usually when you have a huge stop loss most of the time. If you take this trade, for example, and then your stop loss is here, your take profit, let's say it's all the way up. Let's say it's here just now to make it simpler. Why am I doing this? Let's say you're in a clear uptrend, and then you get a bullish no wick here, for example, and then you enter the buy. Let's say you enter buy like this. Boom. 1-to-1, right? And then let's say price tapped in. Boom. And then price started going up. Boom. Okay, cool. Let's say it made something like this. So you see it made a new structure here. And then let's say price comes back down, change of character, lower high, lower low, and then bearish no wick. That would be the only way where I'm like, okay, I don't want to be in the buys anymore because now this trade is valid. So once price taps this no wick, that's when I would close this trade. if it's in profit, if it's in drawdown, let's say this could be in drawdown, this could be still we're in profit. That's when I'm like, okay, cool. This trade's idea is not valid anymore. So I'll close this trade and enter the one on the other hand. So only if you see a setup valid against you, that's when you would close the trade, okay? So I don't want to see you closing the trade just because of a C setup or because of change of character. So only if you see a setup against you that's valid, you close the trade. This doesn't happen very often. If you didn't get what I just said, don't worry about it. It's not that important. And to be honest, it rarely happens. Like you saw, we did 15 trades backtest, and this situation didn't happen once. You know what I mean? Like it happens maybe one every 30 times. That's what I'm saying. So yeah, that's it pretty much. That's it pretty much. It was a very nice journey. I hope you really enjoyed the video and got some value from it. If you watch until the end and you didn't skip the part, first thing I want to tell you is congratulations. Bro, I'm gonna be honest with you. Not a lot of people can do what you just did. That's why I have high hopes in you. Now I'm like, Omar, how do you have high hopes in me? You don't even know me. Well, I know one thing about you. You're someone who's dedicated enough to watch 4 hours video of a guy that you don't even know yapping online, teaching you something that has high potential to change your life. You did what most people can't even do. Most people want just to make money quick. That's what they try to do. Most people who try to learn trading go online and search, how do I learn trading fast? They see it 20 minutes video, they think that's it. They go and they start not even backtesting it. They go and directly start trading it, and then they end up blowing 1, 2, 3 accounts, and then they're like, yeah, this is a scam. I'm not gonna trade anymore. That's the reality. 99% of people do that. Now, you watching such a long video means either you already passed through that journey and now you're like, okay, I need to take this seriously, and that's why you're here, or you're just someone who's new to trading and you realize, okay, I want to do this the right way. I don't want to, try out stuff and then lose and then become profitable, or maybe even become profitable. No, you went directly to the best source. That's why this video was very long, yes, was very detailed, yes, but it explained the strategy in depth. And I made it in a way where I didn't want to just yap too much in the video. That's why I tried to keep it as much value as I could. But now that's why I want to let you know a bit about myself as well. Because I'm going to be honest with you, man. I'm just a regular human. Forget about trading. Let's skip trading for a second. I'm just a normal human. I'm just like you. I'm not better than you. Neither in life, neither in trading, neither in making money. Maybe in trading, yes. Why? Because I put the hours and years and days and months and crying and hating my life to be able to become profitable. I went through the whole cycle. It wasn't an easy journey. I'm gonna be honest with you, it wasn't an easy journey. When I started trading, I wish I had someone having one video explaining their whole strategy directly to me. Most people, when I used to go, they usually put pieces, and then the rest they hide it behind their paid mentorship. That's why I was like, you know what? I want to do something that I wish I had. I wish someone was able to do it to me. And if you watch this whole video, you just achieved my will, because that's exactly what I wanted. I wanted people to watch this. It's difficult to let people watch, I can't force anyone to watch a whole 4 hours video, but you did. You could have literally clicked off whenever you want, but no, you watched this whole video. Why? Because you're dedicated enough to learn the strategy. You're dedicated enough to become profitable. Look, brother, regardless if you're gonna become profitable or not, regardless if you're gonna even start trading or not, regardless if you're gonna use this strategy or try another strategy, regardless of whatever you do, regardless of even if you try to not, if you don't want to trade, whatever you do in this life, do it and finish it. All right? Once you start something, finish it. Because if you just take small piece and then you jump to the next one and then you jump to the next one, that's when you're never gonna be able to achieve the whole thing. You know what I mean? So it's like going to the gym. I like to compare this to going to the gym. Do you believe that the gym works? Yes. Do you believe that if you go to the gym consistently every day, you're gonna become more fit? Yes. Okay, nice. But what about if you go only one day? You're not gonna be able to do so. It's the same concept in trading. If you just try it now and then you're like, oh, okay, cool, I watched a 4 hours video. Now I'm gonna become profitable. No, that's not how it works. Or you go try it out 5, 10 minutes and then you're like, oh no, this doesn't work. And you try a new strategy. Whatever strategy you try, it's not gonna work out for you. I'm gonna be completely honest with you. Why? Because you're not putting enough time and effort into this. You're not dedicated enough about this. What that same concept, you gotta keep trying and trying and trying. Go backtest. After you backtest, try 20 trades. Don't give up. Let's say you try 2, 3 trades and that's it. No, try 20 trades. See the result for yourself. If you don't like the results, do it again. Then see all the mistakes, all the losses that you get. Put them in one, like, in a different sheet. See what's common between these mistakes. Go back to the trading checklist, the rules, the core rules. See these losses. Are they all confirmed with these rules? Oh, okay, this here right here. Okay, this rule didn't work. Okay, cool. Let me remove it, fix it, like that. Don't just go and back this blindly on TradingView and that's it, counting in your head wins and losses. That's not trading. You're competing with trillions of dollars market. So how are you expecting just to go on a TradingView and try for 2, 3 minutes and expecting, yeah, that's it, that's how I'm gonna become profitable? That's not how it works. You're in a big market. You gotta take it seriously. This is not a joke, guys. You gotta take this market seriously. Now, if you've been watching me for a while now, or you've been watching my content, or you just saw a couple of the videos, you would see like, okay, in April, I made more than $40,000. In November, I made more than $20,000. It was like 22. And I'm averaging more than $25,000 a month. And you might be like, okay, Omar, you need a huge capital to be able to make so blah, blah, blah. But I'm gonna be honest with you, brother. This wasn't always the case. I didn't come from money. It wasn't like I just started trading and then my parents were like, yo, here you go, Omar. Here, you take this $100,000, make money, and yeah, that's it. That wasn't the case. It all started from this basement. This basement is where everything started. This is where I used to backtest. This is where I started my trading journey. This is where it was the worst days of my life. I'm gonna be honest with you. I used to live under the ground. I didn't even have a window in my apartment. Now you might be like seeing my stories. Yes, this guy traveled to Asia, traveling the world, went to Philippines, Vietnam, Thailand, living in penthouses, renting cars, doing all of this, doing all of that. But that wasn't always me. That wasn't my life. It all started from this basement. When I used to live in that basement, my biggest dream was to make $3,000, $5,000 a month. If I told that guy, you're gonna be making $40,000 and $50,000 a month, he wouldn't have believed it. He would have been like, no way, me? Who, me? Me making that money? I wouldn't have believed it. But you know what's different between that guy and this guy today? Is nothing. That guy was a very disciplined guy and he believed in something and he was able to achieve it. But what's different between that guy and 99% of people is they give up after failing a couple of times. It wasn't easy. When I used to trade prop firms and funded accounts, I failed 8 funded accounts before passing my first one. It wasn't an easy journey. Well, that's obviously because I was trading ICT and supply and demand and orb. I kept hopping from strategy to strategy to strategy until I had to make my own strategy. And lucky you now have the whole strategy in between your hands. How are you gonna benefit from it? How are you gonna use it? That's the question. Look, I was able to help hundreds of students, like 100 plus, so we don't exaggerate the numbers. And these students were able to do so because they put in the time, effort, and they were dedicated enough to do it. You watching this whole video shows me that you are one of the dedicated people. And here's some of the results they were able to achieve. Now you see all of these people who got their payouts, who became funded, they're not better than you. At one point, they were in the exact same position as you. Take Alamin, for example. Alamin, when he joined my program and my mentorship, he knew nothing about trading. Next video, I'm gonna post my interview with him so you understand how he went from zero to a hero. He literally is a hero. The guy didn't know what a candle is. Told him everything exact same way I just told you guys, but with, of course, with my one-on-one help. That's the only difference. And he was able to secure his payout in less than 3 months. 2 payouts, actually. Look at Gurav. He made $6,000, $6,200 in payouts. Look at Boris, look at Roman, look at all of these students. You saw how many funded we have. They're not better than you. They just put in the time and effort. Now, some of them, their issue wasn't their trading knowledge. Because yes, now you have this free resource, you just watched the whole course, and now you understand the strategy. But some of them had psychological problem. They didn't know how to manage emotions. They didn't know after a loss, that's when they start over-risking and then they end up blowing all the wins. They might go on 3-4 wins, they take 1 loss, now they start risking more, they take second loss, and then somehow all their wins are gone. That was their biggest problem, over-trading. Let me ask you this question. How many times in your life did you start trading, you take 2-3 trades, you win all of them, you keep trading, you end up losing all the profits and even more? How many times did this happen to you? How many times? Be honest with me. You see, that's the thing. That's the over-trading. How many times did you say, okay, I'm gonna set and forget, and every 5 minutes you keep looking on the phone? You say, yes, I'm set and forget, and you keep looking on the phone. How many times did you get scared and you move your stop loss to break even? How many times did you say, okay, when I put a stop loss, I'm not gonna change it, and then you end up changing your stop loss? How many times you say, okay, this is gonna be my take profit, and then you end up extending it a bit more, or you end up reducing it a bit more? These are the problems that people face. How many times you thought you understood the strategy, and then you realize you didn't understand it? How many times did you hear about these online gurus saying, I got an 80, I got a 90, I got 100% win rate? You go and backtest it, and then you get 30% win rate. Well, most of the time, they're lying to you, and their strategies don't have a high win rate. The biggest evidence, they can't backtest, live backtest the way I did. I also have a couple of videos, by the way. I have like 3-4 videos live backtesting my strategy, so you can go check it out afterwards. But the question is, are you gonna keep listening to these online gurus who are lying to you? Now you might be like, Omar, but you're also a mentor. Omar, you also post online. What makes you different? Well, what makes me different? I gave my indicator for free. When people are billionaires or multi-millionaires, like have hundreds of millions of dollars, like TGR, selling their indicators for $17 and $20. That's what makes me different, while I'm giving it to you for free. What makes me different? I'm literally recording my whole strategy in one video, giving it out to you for free. But there is only one thing I can't give you for free, which is my time and my one-on-one guidance, because this takes a lot of time. Yes, I've been recording this video for 4 or 5 hours, and I'm more than happy to give it to you completely for free if this is gonna help you. But only thing is, this video, I genuinely hope you get a payout from. I genuinely hope you become profitable, but I can't guarantee that. Why? Because I don't know how you're gonna be trading. I don't know how your psychology is gonna be. I don't know if you're gonna be over-risking, over-trading, over-leveraging. I don't know any of that. I don't know if you're taking the trades right. I don't know if you're actually following all the rules. I don't know if you backtesting. I can't review your trades. On the other hand, my students, when they join, there is a whole roadmap for them to become profitable. There is a whole plan. It's not like you join, you start trading directly. No, it's not like this. You're not allowed to do that. When you join, you have to go through backtesting. After you backtest, you have to journal everything. After you journal everything, I would have to look at every single trade that you've taken. Funny enough, most of the students who join, 95% of students who join, don't get the first backtest right. They backtest the first time and then they get 60% win rate. I show them how many mistakes they've got. Usually it's more than 20 mistakes. They fix them, and then you're like, oh, Omar, you're right. Now I'm 80%. Now I hit the 75. Now I hit the 85%. You see, that's the difference, because they're doing a lot of mistakes. But that, I can't give it to you. I can only record much on YouTube. But these are the stuff, I don't have an interaction with you, I can't. You reading the trend, if you don't read the trend in front of me and draw in front of me, I'm not going to be able to help you with that. How would I know you're reading the higher lows and higher highs right? How do I know you're identifying a higher low correct way, the same way I do? Well, that's something I can't do except if you're my student. You're also going to be getting group calls, one-on-one calls. Every single week, we have a couple of calls all together. We backtest together. Hours of backtesting. Look at my student, Zach. We backtested together in our lives, me and him, more than 10 hours. With a group, every Sunday, we go over every single trade that was taken throughout the week to know, okay, if you're, let's say, in negative this week, we go over the week and we see what mistakes you've done. Was the week just bad week? Or was it a good week and you made mistakes? We send the trades together. We all trade it together. We take the wins together. We take the losses together. Be honest with me. If you took a loss and you text me, oh, Omar, what do you think about this loss? And I tell you, yo, I took the same loss. Wouldn't this psychologically make you feel better? Why? Because you know, okay, I lost with you. Now, let's say you lost, but it wasn't a valid trade. And I tell you, yo, it's not a valid trade. Now you're going to learn from your mistakes. And next time, you're not going to take the same trade and you're not going to lose. But if I can't help you with that, you're going to keep doing the same mistake and you're going to keep losing every single time. And I'm not going to be able to help you. I would love to help you as much as I can on Instagram. But I also got limited time. That's the thing you also got to understand. You will also be getting a lot more stuff. You'll be getting my personal journal, a whole journal where you see the backtest, the data, everything. This, guys, is your opportunity to be able to invest in yourself. Now, you got to also think about it. These people who were able to achieve these results are not smarter than you. What's the difference? Is they took the risk. They were dedicated enough to be able to be like, see, don't have that, what do you call it? Tunnel vision. You got to see beyond that. You got to be able to see, okay, what am I going to be able to achieve? What is the risk return on investment on that? Am I going to be able to actually benefit from it or not? And just so you get a small, understanding of what we do. This is what we do every single day. Student wins. K passes account, curtain. Eric winning, Lucas winning, Danny winning, Matt winning, Adoria, killer. Like, she's one of the best traders in the community. You can see win after win after win after win. Bo, Adoria again. Alamin, passing his fund and getting $500. You can see here, this is a couple of days ago he got it. 5th of May. Boom, boom, boom. 2 payouts. Another guy, another person. All these people are not better than you guys. They just took the risk. That's it. We in this community, it's more than just, like these online gurus putting their online courses, explaining the strategy that you can find online on YouTube. It's way more than that. We're a family here. You get a chat with us. You get beginners questions, psychology. We even have meme chat. We laugh together. Every single day you gotta put your daily check-in so I can check, okay, what have you done for the day? Have you backtested? Have you done this? We have hanging out. We hang out together. We trade together. Locked in is where we backtest together. You get customer support. You get a roadmap. You get a checklist. You get the courses, the strategy, beginners videos, coaching videos. When you miss a group meeting, that's where you find the videos, and way, way, way more stuff. But obviously, I'm not gonna talk about everything right now, because if I do so, the video is gonna be 10 hours, and I don't wanna do that. Anyway, if that's something that you actually wanna take seriously, if trading is something that you actually wanna take it to change your life, and you're willing to be dedicated, putting at least 1-2 hours a day to potentially be able to change your life. It doesn't need to be, like, okay, trading is gonna be the thing I'm gonna do forever and that's it. No, it doesn't have to be that. I have people who have families, kids, people who works as doctors, people who are students in universities, people who are still in school, people who are business owners. All of these were able to find time to be able to do this, and that's why they were getting results. So if your excuse is, yo, I don't have time, then you're lying to yourself. So if you believe that you are a dedicated trader, someone who actually want to change their life, willing to take the risk, you know what I mean? Willing to take the risk, because what's the worst case? Worst case, you're gonna be where you're at right now. Me personally, when I was where I am before, I didn't like it. That's why I had to make it change. So if you're serious about trading and you want to change your life, all you gotta do now is go apply through the link in my description. And then after you apply, because we don't want to accept anyone. This is a very limited group. Not everyone gets accepted. Once you apply, we go through your application. If you're qualified, you'll get to book a free one-on-one call with me or with one of my assistants. And after that, most of the time it's going to be with me, but sometimes it's going to be with one of my assistants. And after that, if we have to ask you a couple of questions to see that you're serious about this, if you are, and we see that you're a good fit, then you can join our family and you'll be a part of the community. Anyway, I'm not gonna yap more. Regardless if you end up joining or not, regardless if you're gonna become profitable in trading or not, regardless if you're gonna choose this strategy or you're gonna choose another strategy, regardless if you wanna, I don't know what you're gonna do, always pursue your dreams, whatever it is. It doesn't need to be in trading, even if you wanna do something else. It's up to you, as long as I see you succeed, okay? Someone who put 4 hours into watching one video, I believe they can make it, regardless what journey they do. And if you end up joining me, or if not, it was very nice talking to you. If you need any help, make sure you feel free to hit me up on IG. And if it's something about trading, you can also comment on this YouTube. I do reply to these comments. If you hit me up on IG, I also do reply to the Instagram messages. At the end of the day, I'm just a human like you. And it was very nice talking to you. Please don't forget to like, subscribe, comment, all of these stuff. And I will see you in the inner circle. All right? Take care, and I love you all.